up, motherfucker?
1, 2, 3. What's up? What's up? 1, 2, 3. All right. Works. It works. Okay. March 17th, 2026. So nothing's been going on since Friday. Friday ended pretty boring, I would say. So and Monday it opened and it had a little pop, and it's like, looks like everybody's just gonna wait for Jerome Powell. What's up, guy, bro, idiot? So that looks like what we're gonna be. So let me try to explain a few things to you guys. Okay, let me try to. Which way? Let's do this first. Let's do this thing first. Let's see. Let me get this out of the way. So, if you remember about gamma exposure, so far we've been below the gamma flip line this whole time for the last week. You would think like it would be more exciting. We have bigger crashes, bigger pumps, so it's great for trading. But since Monday, Tuesday, not much has happened last week, right? Last Monday, Tuesday was a lot more exciting. Now it's like boring. So a little recovery, a little drop the next day, another recovery. Nothing much. So when you're below in negative gamma territory, it means that the dealers, this is basically the casino here, who are selling options to people, are considered net short gamma, often from puts, which means that they will sell as prices fall. So when stock market goes down, it goes down a lot deeper than it should. And when it goes back up, when it bounces, it starts pumping greater than it would. So you would get a lot of good trading. Not really happening, right? Since Monday, Tuesday, really. So this can create a resistance for the market on the upside and lead also to accelerated moves on the downside. That would mean a bear market if we were staying in this area a lot longer. Okay, so I'm going to stop sharing that. Now, let's go on and move to this window here, and let me explain a little bit further why I think nothing's been going on since the first moves last week on Monday, Tuesday. So let's go and look at this. Okay, so we're not doing the cycle stuff yet. Let's look at, let's see, this thing. Let's look at this article here. So one thing you guys got to know about is there's two types of options expiration. Okay, now one of them you would know is the usual stock index, right? SPX, like SPY, QQQ, stuff like that. You also have futures, you have bonds. They all have options on them. And all of them tend to expire on the third month, okay, with the third week. So that's why the third week of the third month is a bigger deal than the typical third week of every month. This is where they call it triple witching, quad witching. That's what they would call it, because all these expirations happen on this week. And, if you could look at your salary, if you're paid by salary, you get paid every 2 weeks. Usually they fall on these dates too. So that's why when you get your 401k funded, they usually land on a Friday. That's why you get the worst prices typically. Finally got out of UwU. Good for you. So, yes, now we have to try to find the best time to get into NRGU and Gush. I don't know what price they'll be at. It really depends on oil right now, I guess. If oil stays flat like it has been, it's basically oil can go up and down, but as long as the average stays around 90, oil can keep going up. I mean, not oil, but the oil ETFs, right? The stocks that are based on oil. I guess that's my optimistic prediction. Obviously, when I said oil was going to be a good bet, I did not expect the Iran stuff to happen, or if it would have happened, I did not expect everything to happen in a dumb, clumsy way. And I'll get into an article that talks about the Korean War, because the Korean War is a good example of what you want to do for limited warfare, okay, and getting the aims that you want. If you don't do the Korean War style, you end up with the Vietnam, Afghanistan, Iraq, where everything is like stuck for a while. So we'll have to see how that goes. Okay. If everything resolves quickly, then yeah, oil will pull back, go back to around maybe $80 a barrel. If it goes back to $80 a barrel, that's the best time to start loading up again on oil and fertilizer too. Fertilizer stocks, yeah. Yeah. It's tough, right? You see what happened. Oil, you had refinery companies, and the refinery companies today, for some reason, went back up, and it's like, interesting. Was there any news on Qatar being bombed less than the previous week? Is that why the oil refineries are doing good now? I don't know. Who knows? It doesn't matter. I don't want to waste my time thinking about news and events like that because they come and go, honestly. The real thing is like, how long will Trump hold back his punches? Because like right now, Trump is probably thinking, well, I could accelerate more. The Marines are coming on the USS Tripoli, right, from Asia. They're heading their way towards the Middle East. So how much will Trump actually fight Iran? Because let's say he starts destroying the refineries in Iran, the ports in Iran. That means you basically give a green light for Iran to strike even harder on the Gulf states than they already have. If that's the case, then oil is going to go back up again. And they know that if they do that, you're going to have a recession for sure. Okay. Anyhow, yeah, that's all it is. Didn't Kuwait and Bahrain shut down? Yeah, they did, but the thing is like, well, Kuwait. Maybe you mean Qatar. I don't know about Kuwait. Bahrain is because they supply oil to the Seventh Fleet. So yeah, Iran would attack that to cut off the oil from our ships. If you want to resupply the Seventh Fleet right now, it's going to be a hell of a time to send barrels of oil towards a carrier group. So yeah, Qatar, but it, how much does it matter about Qatar and all this? Probably not like for us, for the US. How much does it matter for China and India? I don't really know for sure. This is the question that people have to ask. That's really the question. But Europe, definitely, yeah. Qatar is a big supplier of European natural gas. And you know why that happened? It's because they decided to say F you to Russia, and they ran over to Qatar to say, hey, yo, we don't want to get Russian natural gas. Can we get your natural gas? And they set up all the contracts. They bought all of that natural gas up. And guess what? They can't get it out of Qatar. So this summer and this winter, it's going to be a bad time in Europe. Going to be high prices for utility companies going forward. So their economy will suffer. Europe will suffer. So Europe is the one that should care about fixing this issue. But if Europe doesn't care, then I don't know if Trump's going to care. Do you think Israel cares? I don't know. All right. So just watch the video why USS Tripoli. Let me see. Well, I actually been on one of those American class carriers. So there are a smaller class of carrier based on the American class. So I've been on one of them before. I think it was the USS America. Pretty nice ships. They got a hospital in there, so you can get some nice dental. They even have an optics thing, so you can get new glasses if you want on the ship. Pretty badass ship. It's a smaller carrier for amphibious assaults. So yeah, I've seen them. I've been on them. So they got tons of helicopters, and I don't know if some of those carriers have been fitted with the F-36 vertical takeoff and landing planes. If I think some of them might have that already, but they are a relatively new class, so maybe not. Maybe it's just helicopters on there. So Navy Decoded. Yeah, I think I probably recognized it because probably in one of those big channels that keep recommended. But yeah, I've been on them. Very nice set of ships. They are specifically designed for Marines. So they designed it all for Marines, and so I don't know. There's 2,500 Marines on there ready to go. Amphibious, correct. It's loaded with aircraft for Marine. Yep, that's right. That's what it's designed for. It's exactly was made just for that purpose. But that would mean like we are extending our war machine even further. I don't think people want to hear that. It's better off if we get our drone act together, because apparently somehow we still haven't figured out how to do drone warfare after all that practice in the Ukraine. You would think they would be getting ready for the drone warfare that Iran was pushing out, but apparently not, because Iran was giving Russia their drones. Turkey was giving their drones to Ukraine. You should have saw how drones act and would have prepared defenses on it. But I think, yeah, we really didn't fully appreciate how effective drones are as cheap weapons that do asymmetric warfare. And they got little boats that run on drones, like little RC boats running around the Gulf, like slamming into tankers and blowing them up. So that's nice. That's nice. All right. Okay, let's get some music on here. Okay. Yep, exactly. Yeah, all right. Good. Good. All right, let's get to the VIX stuff here. So VIX expiration is actually Wednesday, tomorrow. So that means Tuesday close, we have end of the VIX. And this is the funny thing about it. VIX is actually an equation. You are basically betting an option on an equation. It's nothing real. If I do an options on a stock at least is real, but you are doing a derivative of an equation computation of another derivative for something real. So that's how crazy it is. And you would think like, oh, how could this affect the stock market? It's derived its value from something else, from something else, from something else. How could it possibly drive the market? Yeah, it can drive the market. So let's read this. The VIX is the CBOE, so that's the Chicago Board of Options Exchange. Volatility index designed to reflect the market's expectations for near-term volatility in the S&P 500. So that means the implied volatility, not the actual volatility. So it's the guesstimate. It's the people betting on what the volatility will be in the future, or at least the near future, 30 days. So VIX options and futures allow investors to express views or hedge against future volatility. However, VIX options differ from SPX options in one critical way. They are cash settled and settled to a special calculation, the special opening quotation. So it's math upon math. It's not actually something real. It's something that's derived from the SPX options themselves. Options themselves are derived from the actual price of the SPX at a certain time. So it's more whatever, right? This is not even anything related to reality. It's just what people expect on top of what people expect on top of what other people expect. So that's how crazy the stock market really is nowadays. These complexities add to the challenge of actually figuring out, is this thing going up or down tomorrow? Like, seriously, this is not easy to do. All right. So that's why if you try to trade every other day, every second, you need to know everything about this crap. VIX options typically expire on the Wednesday, 30 days prior to the next month's SPX option expiry. This date structure means that VIX expirations frequently fall the day before monthly SPX expiration. So that's always the Wednesday before the Friday. Friday is when SPX expires, adding layers of complexity and potential flow distortions in the SPX options ecosystem. Yeah. That's why they pay the big money to people who know math and physics. That's why they always try to get the people in math and physics to go work on Wall Street, because this shit is essentially a math problem. On expiration morning, the SOQ is determined by actual opening prices of SPX options, not midpoint quotes or last trade prices. This opens the door for price discovery dynamics and potential manipulation as market participants seek to influence the VIX settlement value through strategic activity in SPX options. That means the big players are coming in and going to manipulate everything they can to force the SPX to go at a certain way in a certain direction for this week, okay, so that make sure that people lose their money. So if you are gambling this week, you are not smart, because this week is designed to make you lose money, okay? So that's usually why when people play options, they do everything with a date that's far away. The closer you are to that date, the more problems you'll have predicting where things go, and you'll lose money very quickly. So that's why you got Jerome Powell tomorrow talking at 11 p.m. my time. So that's 11:30. So that means 2:30 Eastern. In the afternoon, Jerome Powell will start talking, blah, 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 blah. And then you will think the market is going one way. And then all of a sudden, the next 2 days, it's going the other way. So if you didn't quickly close your trade, you probably will get screwed over, because the market will just revert to the mean, to whatever mean we are. So let me give you this. This is something called max pain. Look at where we are right now. So max pain is when the house, the casino, makes the most money. This is the price at which most of the people that bought puts lose their money. Most people that bought calls lose their money. So there is a price where the maximum amount of pain happens for the people that bought options. The people that sell you the options want it to be stuck at this price. And look at where it's at today. Today, the current price is 6,720. So max pain is 6,750. So unless there's some big news event to make this thing not be here by Friday, I'm expecting it just to go back to this price. So whatever happens, it'll just go naturally to this price. Think of it like some kind of bowl, right? Where if the price goes up or down, it'll roll back towards the middle of the bowl. And that's what's going to probably happen. Unless Trump says something really crazy or Jerome Powell says something really crazy, it's just going to go right back to the bottom here. Or Micron. Micron has earnings after the close tomorrow. So who knows? People have been pumping that Micron, right? NVIDIA has been promoting their latest generation of GPUs, and they say, we're going to need more memory. And then all of a sudden, everybody ran back to the memory stocks and pumping that back up. Guess what? It's probably going to roll back down the hill and go and force the SPX to this level. I don't know. They'll do whatever it takes to keep it here, pinned at this level. All right, so now you get that. Okay, let's keep reading. On expiration morning, the SOQ is determined using actual opening prices of SPX options, not midpoint quotes or last trade prices. This opens the door for price discovery dynamics and potential manipulation as market participants seek to influence the VIX settlement value through strategic activity in VIX options, SPX options. If large open interest exists in certain VIX strikes, traders who are long or short these options may actively trade SPX options around the open to push the VIX SOQ closer to the desired level. This creates a brief but intense focus on SPX options, often resulting in surges in volume and volatility during the first 30 minutes of trading. Now, I guess that's why you always see me go, well, within an hour of the opening bell, I probably don't need to look at it no more. Whatever trade I wanted to make already happened in the morning, right at open, within the hour. So that's probably what you see. So even though I don't trade options, I need to know what options does to my trades though, right? Because this is the tail wagging the dog. Back in the old days, you would think like price matters and options was just blah, the gambling side of the market, or where the people would use it to gamble or have insurance. Now we're in a world where the options actually controls where the price is, because so many people use options instead of actual buying and selling of shares that the market now, actually, I showed this chart last 2 years ago, right? When I first started this show, I showed you how big the derivatives market, options and futures, was compared to everything else. It's bigger than real estate. It's bigger than gold, silver, and Bitcoin and whatever. It's bigger than a lot of markets out there. So people betting on options has become the largest suck of capital. This is where people are at. They're betting on futures and options. They're really not anywhere else. This is where most of the capital has been parked at. So that's why you have to look at it. You just can't ignore it anymore. Why it matters for SPX and equities. Liquidity distortion and market volatility. Because VIX options settle against SPX option prices, hedging activity, and speculative manipulation attempt to exert control over SPX quotes. This can temporarily distort liquidity in the SPX options chain and affect order book dynamics in S&P futures or ETFs like SPY. And we talked a little bit about the order book. So if you remember, I was talking about how would you do that volume weighted thing where I just had this bell curve showing you the distribution of where things are. That's what's happening. It's changing how people buy and sell. It's not really a lot of buyers and a lot of sellers. It could really just be people who are selling the options, manipulating the price just to get it to where they want to by the end of the week, end of the month, end of the quarter, or end of the year. It has nothing to do with reality at all. And then you're like, well, let's just do fundamental analysis or so. No, sorry. Fundamental analysis. Okay, if you're willing to wait 20 years for the fundamentals to matter, go ahead. But a lot of people need to make money now. We can't be waiting 20 years for something to happen. And if you actually care about when you buy something and when you sell something, this matters. That's why I don't like that dollar cost average stuff. It's like if you buy randomly at any time without knowing, wait a minute, this is options expiration week. If I buy it at this time, maybe it's just manipulated price. The real price will come out the week later. So why don't I just wait a week? See, that's smarter, right? That's not the dumb way where you just, I just buy it at this set point, this set dates every week or every month. And on average, it will give me the average cost that I want to buy that stock at. No. Sorry, guys. I think you got to be a little bit smarter and understand, that day is option expiration. That's when Jerome Powell talks. That's the end of the quarter. So that means this and this would probably happen. That's the better way of doing things. So don't buy it like any date that you just pick at random. Okay? That doesn't work that way. It's better off that you are a little bit smarter and understand things happen at certain dates, okay? And put it in your calendar and go like, this is expiration for the VIX, this is expiration for XPY, blah, blah, blah. There you go. Because you don't want to fall into the trap of believing the price that you see this week. Because after this week, we'll get the true price next week. This week is Fugazi, fake. It has nothing to do with reality. It's just because all these guys are forcing the price to be a certain way so that they can win, okay? And you, the options buyer, lose. And that's what happens. On days when VIX settlement volume is high, option dealers may dynamically hedge in S&P futures, pushing price up or down, especially if gamma exposure flips. This hedging response may also explain unusual intraday moves that lack clear macro analysis. So we can expand this further. Not only can it happen during the day, let's look at what happened since last week. After we got all that news from Monday, the weekend, Monday and Tuesday, there really wasn't any new information, right? We just know like, okay, Iran's still bombing this place and that place, but nothing new. They're not bombing new places, I guess. Trump hasn't killed the next leader, supreme leader, so nothing new there. Essentially nothing. So when there's no clear macro analysis, right? No earnings either, right? That's important. There was really no important earnings anymore. what could you do? What can the market do? It can't do anything because nobody wants to bet on a certain price. And then that's when the casino takes over and starts moving the price around for you. And it's moving the price towards the price they want. Okay, so that it likely will end Friday that way. While the effect is generally short-lived, yeah, well, tell me about it. In certain positioning environments, it can exacerbate price swings, especially in the first 15 to 30 minutes of the session. Okay, one phenomenon frequently observed is pinning. This occurs when the spot VIX price settles very close to a strike with large open interest. Large institutional traders and dealers holding significant VIX positions may have an incentive to see expiration prices align closely with their portfolio strike levels. To accomplish this, some traders may attempt to steer the VIX SOQ by using SPX options, especially for out the money, so that's OTM, out of the money puts or calls, which heavily influences the VIX calculation. When large players begin buying or selling those contracts aggressively around the open, the knock-on effect is that SPX option prices become more volatile, often spilling into SPX futures or underlying index prices. Okay, there you go. This dynamic is typically strongest when open interest is concentrated near the money in VIX options. Market makers are short VIX options and hedging around expiration. IV, so I guess that's implied volatility, is sensitive due to macro environments or earnings seasons. Okay, so we are done with earnings, right? We haven't gotten any more news from Trump or Iran. That's different from what we've already seen. So there we go. So probably everything is just going into the VIX options and hedging and blah, 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 and whatever. No direct equity impact, but indirect effects. It's important to note that VIX options are not deliverable into VIX futures or the VIX index. They are purely cash settled. So meaning it's not real. None of this is real. You're betting on something that's purely a math equation. So when you get that thing through expiration, they'll just pay you in cash. There's no barrels of VIX oil. That's not what it is. There's no bars of gold VIX. Nope, nothing like that. There's no shares of VIX. There's no shares, okay? There's no stock for VIX. It's just basically a math equation. That means there is no physical buying or selling of equities or ETFs like you'd see in index rebalancing or ETF flows. So that's why every time you have a Monday after a Friday of options expiration, so the coming Monday, you'll see usually it drops. You'll usually see the price of the S&P drop from whatever it was closing on Friday. VIX, it doesn't work like that. So whatever happened today, it's closed, and then they settle out tomorrow on Wednesday. So what happens is it resets the whole counter, and then everybody's trying to figure out what's going to happen the next 3 months, okay, in the VIX. So that's what's going to happen. And we're going to have to see what Jerome Powell says, and that's what's going to affect things, I believe. Or maybe some Iran stuff, I don't know. However, because VIX is derived from SPX options, any large hedging activity or strategic gaming of the VIX SOQ flows back into the SPX. And since SPX is a benchmark index with massive influence over US and global equities, second-order effects can still ripple into stocks, especially large-cap names and ETFs. So what they're saying is, even though it might not directly influence something, it might percolate out into the ether. So once this VIX is over with tomorrow, something starts changing in other stocks that you might have, you know? So you might own a stock that is heavily in the VIX, the SPX, like Nvidia. So you might own something like Nvidia, and then all of a sudden this expires, and then your Nvidia stock starts moving around like, what the hell's going on over here? Well, there you go. These effects are most pronounced when VIX open interest is extreme. Dealers are short gamma in SPX options. Macro volatility catalysts are nearby. Ooh, FOMC, yes, that's tomorrow. Geopolitics, oh, that could be any day, any moment, maybe even tonight. Iran, Trump, this, blah, that, blah, China, blah. Okay, And SPX is near key technicals or psychological levels. Yeah, that will happen too. Yeah, we are at a key level, right? On Friday, we basically were at the edge of the cliff, and then we got rescued on Monday. So yeah, that's true too. VIX expiry induced volatility. Okay, do I want to read all this? No, I don't want to read all this. I think you can read the rest of it yourself, okay? But I think you got the idea. You got the idea. The article is in the description, so you go to the description, you can find it. Okay, anything else? I talked about Max Payne. All right, so same thing with stocks. It's also true with crypto. So crypto expiration is actually next week. So the funny thing about Bitcoin and Ethereum, so all the cryptos, their options expiration is the last Friday of the month. So that's next week, not this week. It's next week. So stocks and stock index and futures for stocks, it's this week. But for crypto, it's next week for some reason. And we see the price here for Max Payne is 75,000. Guess where Bitcoin is at right now? We're at around 75,000. So there you go. Bing, 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 bing. I think we're going to be stuck there for a while. So if we want to see 80,000 on Bitcoin, we're going to have to pass next week too. Sorry, guys. It won't be decided this week. So if you see any funny movements, though, please take advantage of it. So if it goes down below 75,000 this week, then you might as well go long, and then by Friday it'll run back to 75. If it goes above 75, if we actually do hit 80, then you might as well short, and it'll run back to 75 next week. So same thing. Ethereum, the Max Payne is 2,400. Okay, so I think now you understand, right, how the game is played. So every third week, watch out. Every third week of the third month, watch out. For crypto, it's the last week of every month. Usually the last full week, not the partial week, full week. Okay. All right. So this is the cycle stuff here. I'm going to do some cycle stuff. So my cycle indicator says that we should hit a top somewhere around June. So if we actually finish this bottom move, we can actually continue on moving up until June. So after next week, we'll see if April does better, May, and go all the way through June. That's where the next top is. If we look at the S&P 500, you also see the same thing. I see a bottom here. So let's see if we complete the bottom and make it up till June. So both stocks and Bitcoin agree that somewhere June is the next top. Now the question would be where's the bottom though? Are we done? Are we done? Probably not. Let's see if the stocks move, how they move after Jerome Powell into next week when options expiration on Friday. So I think by Monday, you'll see if we just crash and burn for the rest of next week on stocks and whether that will translate to Bitcoin as well. If Bitcoin ignores it, then that's very good, because then I would say Bitcoin can go a lot higher than 80 and trap people at 90 and 100K again. So you could see a lot of people chase Bitcoin all the way back up to 90, 100K, get trapped again in June. And then we go for the next ride down to like 20, 30, 40,000. So yeah, things don't go down in a straight line. You got to zig and you got to zag. That's how trading is. So, okay, so I'm going to play a video right now. I'm going to do some cycle stuff since I brought it up. And let's see if you guys like what you hear from this guy. Okay. So this is Tom McClellan, the son of the guy who made the McClellan oscillator, the McClellan summation index, exponential moving average. Also, his parents made that together. So he's ultra boomer.
Welcome to another episode of Cycles TV. Today we have a special episode. We have Tom McClellan with us today for this episode, and therefore we will talk about a special topic in regards to sunspot cycles and the solar cycle related to a lot of analysis he did recently. So let's spend the next 20 to 30 minutes on that subject.
All right, so I'm gonna fast forward. Okay, about 5 minutes into this.
Charts like this.
Well, astronomy people like to talk to other astronomy people about astronomy stuff, and market people like to talk to other market people about market stuff. And the two groups don't overlap very much, and they don't think that there should be any overlap. And so people are purists. It's the same issue that I get when I look at global climate data, which has a lot of actually very interesting insights for the financial markets. But the climate people want to only think about in terms of climate for its own sake, and the market people think, well, the climate can't matter. Well, the climate does matter, and if you're not going to look at it, how it impacts economics, why are you bothering to look at it at all? Economics is the study of how things impact humans and how humans make decisions based on that. If you don't open yourself up to the idea that some outside influence might influence the way humans make decisions, well, that's a very closed-minded viewpoint. But a lot of people are very closed-minded.
Yeah. So because that was the first sentence which I felt, yeah, okay, this is the same we from a cycles research area often see. So when you start to talk about cycles as cycles from a special subject, you get similar feelings like you described with that sentence here. So I'm quite happy that you tried now to bring those two areas together. So let's first talk about what you use now to analyze those topics. You did a lot of research on sunspot cycles, right? Or what we are now discussing for the next 20 minutes is related to sunspot cycles for now. So how did you get to that topic, monitoring sunspot and sunspot cycles?
Well, sunspots are interesting, and we have data on sunspot counts going back to 1749, which is when somebody, I don't even remember who, first started making observations all the time about how many spots he saw in the sun using a filtered telescope. And he thought, some astronomer thought that was interesting and worth writing down. And so that's why we have data back that far. It's not the best data on the sun. Modern solar analysts and experts have lots of other data that they look at X-ray output and flares and different sizes of flares. There's lots more scientific things that we can describe the sun's activity variation with, but sunspot counts is the data that goes back the farthest. It's the easiest data to understand and work with. It's not the fanciest and perhaps most accurate data, but it's very easy to work with. And so if you want to make a long-term comparison, well, you really can't go back and look at what the X-ray data was from the 1800s because nobody had those data. So we use what the data is that we have. I first started looking at sunspot data relative to the stock market, but I thought, well, maybe there's some other ways that it might matter. And so I looked at the data and thought, what can I make of this? And compared it to lots of different things. And some things turned out to be nothing. And some things, as you were going to talk about, were very interesting.
So before we jump on now the correlation or what you analyzed related to sunspots, let's make a basic introduction, at least for those who might be new to the subject. So I think the primer or the basic principles behind sunspots is the solar cycle, which is defined by the sun. And this is on average 11-year cycle, which is shown here by that simulation. Where we have the timing here from left to right, and you see that the sun starts on the upper left, which are in a very quiet status quo, or very calm. So there's not much activity. That's why it's quite dark colored or dark shaded. And then the cycle starts. So the solar activity rises within that period to the first up cycle at the year of 2002 here in this chart, which is then the very active period of the sun, where we can see a lot of energy is erupted from the sun. So this is where we have the active part of the sun, and then the cycle goes forth, and then we have another calm period of the sun, and the length of that cycle is 11 years on average. I mean, we have between 8 and 14 years for that solar cycle, but this pattern repeats within the sun due to magnetic impacts within the sun, and then solar flares and also those sunspots emerge during those periods. I think what is just important to cover is that when the sun is most active, those are the times when we have the most sunspots also to be observed and the most cyclic energy coming from the sun. So, Tom, would you see this is a fair basic explanation on the solar cycle before jumping to your chart again?
Yeah, and to make it even simpler, the sun varies in its output on a cycle that's about 11 years. It's 9 to 14 years and over all the different cycles that have taken place. If you measure it all the way back to 1749, the average is 11.7 years. If you look at just the last 5 or 6 cycles, it's a little bit shorter. It's about 10.6 years. So it's going to vary. It's approximately 11 years, but it's not exactly 11 years. And finding the exact bottom is really tough because the bottom can last about 2 to 3 years. So which moment of that 2 to 3 year period was the bottom? And that makes it very difficult to count. Picking out the high is a lot easier to count because that's a very, very, very conspicuous in the data that as we're going to see a little bit from now. But yeah, the point is that the sun varies. Now, why would that matter to humans? Well, that's a fascinating question. It's not an essential question, but it's a fascinating question because we always want to know the why. The people who have tried to explain it say that, well, the human brain is just a bundle of wires, and we know that sunspots can affect radio signals, and if you get a really big event like the Carrington event, and I think it was 1859, you can get voltage surges on telegraph wires, and you can fry electronics. If the sun has the power to do that to electronics, well, it probably has the ability to affect the wiring in our brain somehow. If that's an okay explanation if you really want an explanation, but we can proceed.
All right, so someone asked here, Star Killer 1, what does the sun got to do with anything? Well. Sun has a lot to do with everything, actually. It's got a lot to do with everything. Let's see what the sun is. Let's see what the Caltech boys are doing out here. Human magnetoreception. What did we discover? We have confirmed that human neurophysiology is indeed sensitive to magnetism. We have discovered specific rotations of Earth strength fields that trigger distinctive brainwave activity that shows that we are subconsciously processing geomagnetic stimuli. Well, now you know why people have moods, huh? I wonder why they're so moody this year. Why are these fuckers crashing out? What did I do? Do you think that affects stock markets too? Probably. Maybe Trump went bonkers. He got a dash of like a Carrington event in his brain, and now he thinks he's God and has to serve the tribesmen. How about that? There we go. Anyway, and that affects your stock portfolio. So yeah, see, I'm waiting till April to see what they're going to do. They had a brutal drop. I got greedy and should have done what I normally do, which is become conservative. November. Yeah, no shit. So in this show, I told people get into oil. Did I know that oil was going to be the thing to get into? Nope, I didn't. I just thought like, well, based on what I saw, based on my analysis, oil would be a good place to park your money because gold did its thing, silver did its thing. It's probably going to go sideways. Stocks already did its thing up until October, November. You know, semiconductors kind of had that last push up, but the only reason the NASDAQ and S&P 500 kept going sideways was because semiconductors was helping it out, and I was getting the hell out of there. You know, you think Micron and all those other stocks were going to keep on going? Nope, I don't think so. Dude, they already went up 100%. SanDisk was 200%. You think that was going to continue? Nope. I'm sorry. That's not going to continue. So we have to reset. We have to pull back. And outside of most other stocks, oil looked like the one that was improving. Oil companies, particularly. So if you go back to my stream, I said buy oil here, buy here, just before this week, this huge candle start popping up. And I think it was at the time when John's channel was struck, so you would only see it on my channel. So please subscribe to GetCrack to me, so just in case shit goes down again. I don't know. YouTube is very picky about what happens. Subscribe to GetCrack to me, GiveCrack to the number 2 me on Kick and YouTube. So just in case I get kicked off completely on YouTube, yeah, go to Kick. So that's what it is. See here, see what's been going up, getting daily and buying, monitoring these things. Yeah, I'm not paying attention that closely. I just told people to buy oil using ETFs. Just buy that crap up and let it roll, like UwU, right? So just buy that and just let it roll. Hopefully we can keep going up, but maybe not. So I told people to switch over. Yeah, I think DJFB popped over in one of the streams and he said, I got 20,000. If you only had to buy one thing, what would it be? I said, buy oil. Buy UwU. That's it. Like, that's the only thing I believe in right now. And yeah, that's right. So that worked out. Okay. Last year, the only thing I really got into was SOXL, but I didn't tell people that, right? So April, I kind of was like, I don't need to stream anymore. There's nothing to talk about. Everything's going up. But semiconductors went up the longest. I didn't predict that. I didn't think people were so moronic that they would chase memory stocks like they did. So memory stocks is the reason this thing kept going from December through February. That's the only reason this thing went up a little bit more than every other thing. So out of all the stocks that you could have bought in April, semiconductors as a group was good. But if you bought semiconductors as individual stocks, you would have a hell of a time, because you would have been like, oh, I gotta be in, let's say I gotta be in AMD now, and then I gotta switch over to Intel, then I gotta switch over to Broadcom. Oh, get out of Broadcom, go into SanDisk. You know, you would have had to jump, and I was like, I ain't doing that. Fuck that. Just get the ETF and then leverage it 3 times. So this is 3x SOXL. If I really knew it was going to go up that well in a straight line, I would have got a lot more than I did, you know. But okay, whatever, fine. Because I was also diversified into gold and silver too. So gold and silver towards the end did better-ish. But still, if you only had to buy one thing at one date, I would still say buy semiconductors, buy SOXL. But then, you know, this is hindsight. I would have to go back in time and be like, yeah, I know for sure this is going to happen. This is going up 700%. Duh, 700% from the bottom to the top. Yeah, no, I don't have that goal. I don't have a crystal ball that good. Okay, guys? If I did, I would have done that. But yeah. Only gold and silver kind of did better. Like, if you leverage gold miners, you would have did slightly better, maybe, depending on when you got in. Silver, yeah, depending on when you got in also. Like, if you got it at the right moment and didn't waste your time, you could have switched off. You could have said, like, get out of semiconductors, jump into silver, get out of silver, and jump back into memory stocks, right? You could have did that. But then again, like, dude, you have to be really, you have to know the future pretty much. Like, I don't know, like, if you're that good. People aren't that good. So if you went back and said, like, how did I know oil was going to go up? I had other reasons oil was going to go up. I didn't care if Iran did or did not happen. It was going to go up. Gold said so. So let me pull this up for you guys, if you guys remember. This is one of the reasons. Gold told me oil was going to go up. So gold goes up, then afterwards oil goes up. That's the relationship here. Why is that true? Maybe it's because people who buy gold knows inflation is going to happen in the future. So then, yeah, they would know, like, oil is going to happen. Oil's going to go up. So this is oil, right? Oil's in black. Let me get rid of this now. Let me get rid of this. So gold says oil is going to go up into 2027. That's it. Did I know oil was going to spike up like this? No, gold didn't tell me that. I just know oil will go up eventually, but will it go up like right now? No, I don't know. I don't know if that was going to happen. That's definitely not something I would have been figuring out. All right, what's up, Jewel? Yeah, what's up, man? See, the YouTube just uses the actual handles. Now I have to convert it into actual name, so that's Ponder. Okay, see that wastes my brain power here, because then I have to use a hash or something. Is that what they call it in computer programming, a hash? Where I identify like the item from the string. I don't remember. It's been a long time since I did any real programming. It's been up and down since 4 or 5 weeks this week. I moved around, sold about a fourth of what I was holding. Yeah, you should have did it earlier. The way it was moving since October, yeah, it looks sketchy as hell. It was something was going to happen one way or another. And I guess it was Iran. If it wasn't Iran, it would have been something else. So, again. So, Eric was talking about Fidelity. I know Fidelity has been improving their features because they've been trying to compete with the Zoomers. So Fidelity was like a boomer. It's like a boomer thing. So if I go on their website and did stuff, it was always like the always 5 years behind on GUI. But I liked it that way, actually, because it ran faster. The website ran faster. So you could just be on the crappiest internet and it would just still work. But now, because they cater to Zoomers, it's like, bro, it's like any other brokerage now, where it's like you need good internet to load all the widgets they have. They got all these widgets popping up. It's like, I don't need that. I just come in there to buy and sell and set my buy and sell orders. I don't want anything else. So that's just me, though. So yeah, TK needs more simp bucks. Good luck with that. Yeah, so everybody should just watch the replays. The problem is people don't have time. That's the thing. I go through a lot of details and info while I'm talking, because as I talk to you guys, I remember certain things. I'm like, oh yeah, I remember this. Let's talk about that. Oh, I remember that. So every time I read an article, I remember. But it's something you just pick up through osmosis. So all this stuff I learned through the years, as I can't just total recall that thing and spit out everything all the time. And I guess that's the problem. And you're going to have to, I have to go through all my old videos, every single one, and see if I want to clip them out or redo them. Like, I find stuff where I talk about the same topic and I repeat it over and over a certain way. And then I just try to do that. So, I was reading all the IT mergers acquisition for 2025. Palo Alto is merging with CyberArk. Yeah, that makes sense. I think a lot of these companies will have to start merging to survive as we go on. So there you go. That's why everything matters here. All right, let's continue. Let's continue on here.
And use the data, even if we don't know why it works. We use gravity every day. We turn on the light switch every day, even though we don't necessarily know why electricity works. You don't have to understand the why in order to use it.
Thank you. Yeah, so right. I mean, we're here because we have the data, right? But I think just the introduction tells us there is some natural rhythm behind that data we are now observing, even though we don't get into the root cause more in detail, but we have data here. Okay, so let's set this as the baseline information we have around the sun. And let's now move forward on the specific chart you posted on X around three weeks ago. And it was exactly this chart here, which I'm showing now. This was the chart you included in your X post. Tom, can you explain us what do we see here?
Okay, so on top is the spread between the yield on the 10-year Treasury note versus the 1-year Treasury note. When we talk about the yield curve, that refers to the plot of all yields going from 1 month all the way out to 30 years. You can't really plot all of those into a two-dimensional chart. And so we just take a snapshot of a portion of that, the spread between short-term and longer term, so 1 year and 10 year. And so when it's a very high spread, that means that the 10-year is very far above the 1 year. In other words, we have low short-term interest rates and high long-term interest rates. When it goes below zero, we say that the yield curve is inverted because short-term rates are above long-term rates. And so this goes back and forth with the economy. When you have a economic difficulty like the global financial crisis, the Fed tends to cut interest rates, and so you get a very high or a very steep yield curve, a very high reading for the yield spread. And when things are going well and the Fed is tightening rates because they think that inflation is too high, then you get an inversion. And what's interesting is that these movements in the yield spread tend to match the movements of the sunspot if we make one adjustment. I shifted forward the sunspot count by 3 years to reveal how the yield spread follows in the same footsteps after that 3-year lag time. Now, the thing that your eye is immediately going to get drawn to, and which mine did, is the exceptions to when this didn't work, such as the global financial crisis in 2008. And we also had the problem during the Arab oil embargo in the mid-1970s when things got a little bit crazy. We most recently had a period of non-correlation to this in model during COVID. So when you get an event like that, you throw the relationship off. But then when that event passes, the natural relationship tries to get back in gear. And we are seeing that now as the yield curve is steepening, meaning that we are seeing short-term rates getting lower and long-term rates staying high. And so we're getting a positive spread, and that matches the ascent in the sunspot number 3 years ago, and it's going just like it should.
That's a great observation, Tom. Could you?
All right. So we got that much into it. So let me bring back something. Let me talk about this. If StreamYards wants to cooperate. Okay. All right. So what's this? What did I do here? This is 3 months minus 2 years. Okay, so when they talk about spreads of bonds, they look at over the whole curve. You know, some people do 10-year minus 2. That's a popular one. Some people do 2 minus 3. Okay, this is what I'm doing here. I think Powell has his own like curve that he uses. I forgot, but it's a little bit more sophisticated. He used the futures pricing of the 3-month curve or some shit. I mean, something I can't even get. I don't know. Maybe Bloomberg Terminal, you could do this. But let me just do this. Let me just do 3 minus 2. And what this means is that when you get negative, like here, like you go, so what this means is that the 2-year yield is smaller than the 3-year yield. So why would that happen? Like, you know, why would that happen? You know, it has to. So yield goes opposite of bond prices. If the yield is going down, a lot of people are probably buying up the 2-year and like saying, I don't want that 3 month. So like, go away. Like if you offering me a 3-month bond, which is basically a very short-term bond. It's essentially, that's what they call a T-bill. That's what they call a T-bill. So T-bills are essentially 3-month, 6-month, 1 month to 1 year. That's it. A note is like 2 years to 5 years or 7 years, I guess. And then a bond is actually 10 years up to 30 years. Okay. So what this means is like, I don't want those 3 months. I don't want those 3 months. I want the two years more than I want the 3 months. And the reason you saw this thing drop like it did here, you see this, it's just going down. This went down before the stock market went into a bear market in 2022. So this was like back in July and August, the market was already kind of going like, wait a minute, something's fishy. I don't think inflation is going down like Jerome Powell was saying. You have to remember, Jerome Powell was saying like inflation is transitory. Inflation is transitory. And then he started changing his tune around November, Thanksgiving. So the bond market was already smart enough to smell this out. The bond market was saying, nah, bruh, nah, you're wrong, Jerome Powell. You're wrong. So that's why they always say the bond market is smarter than the stock market. The bond market knows what's up. Okay, the bond market knows what the Fed is going to do before the Fed even knows what it's going to do. Or perhaps some people might say the bond market is, being truthful, and the Federal Reserve is a liar because Powell doesn't want to scare the markets before his bosses, his real bosses, get their money out of the market. All right. So the bond market was already sniffing Powell out. They were already saying like, oh man, you are wrong. You're dumb. Blah, 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 whatever. You're a liar. And then you see this bottom here that the bond market made. It was around April. So this was all during the whole Ukraine stuff and everything. Everybody thought the world was coming to an end. But the bond market started recovering, I guess, because they were saying like, oh, okay, we'll buy those 3 months now. We'll buy those 3 months now. And so it was essentially saying the bottom is coming. The bottom is coming. So you can see this thing is coming ahead. It's like the top is coming. The top is coming in the stock market. The bottom is coming. The bottom is coming in the stock market. So this thing in a few months ahead of time told you what the stock market was going to do. Okay. Now let's come back to here. So we've been going sideways this whole 3 month and 2 year relationship. So nothing too amazing. You could see like it was kind of like this thing would tell you the intermediate tops though. So every time it had like a high on this indicator, like you could take in a couple months, you had the high in the stock market and then you had a little dip. Then you had this, you had a high in the stock market a few months after this made a high and then you had a little dip. And then here again, you had a high in the indicator and then you had a high here in the stock market and it made a little dip. Now we got this thing going where this thing kind of made a high, but not the same high that it did before. And it's just been drifting lower and lower and lower and lower since April, right? So April was kind of like a weird point with the tariff stuff. You could see like it's kind of weird. And now we're going down in this indicator. We never made a return high up here. And then we're about to break the low here. So what does that mean? Does that mean like we're going to be at a point just like we were in 2022 where we are making a major high and it's going to drop? It could be, it could be. This thing, we have to watch this thing carefully as we go into the fall. Let's say we have a pump, okay, or a drop, a dump, and then a pump, a recovery into June. Then June would be probably where the real high would be before the next drop into 2027, or we could last into 2027 and have a drop. So I would be watching this very carefully now and see what it does. How does the bond market feel about 3 month yield versus 2 year yields? This really depends on the next Fed chair. The next Fed chair will come in May. Jerome Powell will talk tomorrow. This is the second to last FOMC he'll do. So he has one tomorrow and then one more at the end of April. And after that, he's gone. We have a new guy coming. How this reacts to the new guy will be really important. Because if this thing just drops like a rock, like it did here in 2021 before the 2022 bear market, I'd be worried about 2027. Okay, there you go. This is your hint. That's your hint. That's how you can predict when things are going wrong. Okay, so what we're doing with the sunspot stuff is different. Sunspot stuff is like he's using the sunspots to predict the moves of the 2 year or 1 year versus 10 year. So 10 year and 1 year. Yeah.
Also had the problem during the Arab oil embargo in the mid 1970s when things got a little bit crazy. We most recently had a period of non-correlation to this in model during COVID. So when you get an event like that, you throw the relationship off. But then when that event passes, the natural relationship tries to get back in gear, and you're seeing that now as the yield curve is short-term rates high, and so we're getting a positive spread, and that matches the ascent in the sunspot number 3 years ago, and it's following just like it should.
That's a great observation, Tom. Could you give us or take us with your journey? I mean, how did you come to those charts? I mean, you explained now what the chart is, but I assume it will have spin up your brain for some nights, sitting in front of screens, shifting data from left to right. So what was your journey about detecting that correlation?
Well, one of the problems in the stock market analysis is that we have a lot of people who do hokey, really bad analysis, and planetary enthusiasts have given technical analysis a bit of a bad name. They talk about when Jupiter and Saturn are 120 degrees apart, then that means this, and I don't really find much utility in that. I'll look at it and say, is there anything to it? And I don't really find much utility in it. But if something's going to matter, it's probably the most massive thing in the solar system, which is the sun. So that's what I wanted to look at. And I've compared the sunspot cycle to the stock market and found there is a bit of a correlation. It's not a very strong correlation. It's not a strong enough correlation to use for trading, but it's there. Correlation doesn't tell you about causation, but it does tell you about relation. It says that the two sets of data are related. Causation is one type of relationship, but it's not the only type. All that correlation will tell you is that there is a relationship of some kind. When you get a correlation to something that happens 3 years ago, well, then you're starting to hint at causation, because you can't not say that the thing that lags by 3 years was causing the thing that led it 3 years ago. So the thing that led it 3 years ago is probably a causative agent on the lagging data.
So yeah. So and I like those stories behind those pure data, which we at the end we just finally show the data, but there's always a journey, which got you there. So okay, so the solar cycle as a main rhythm which cannot be ignored, and there is an impact to our human beings somehow or the other. We don't know exactly yet, and you see the relation in the data. That's what brought the attention to that. I mean, we don't know the causation or the root cause, but we can clearly see the relation. Let's get back that chart for a second. So following to what you said, this also gives us a preview into the future, right? What we would expect from the yield curve here, right? So I mean, if we plot forward the sunspot count, this gives us already a preview what to expect from the yield curve. So it should continue to rise following your observation.
And the sunspot peak for this current cycle that we are in now occurred in 2024. And we're now seeing declining numbers of sunspots, which is the very normal way that the sunspot cycle unfolds. So if you count forward exactly 3 years, then 2027 is when we should expect a peak for this spread between the 10-year and the 1 year. It doesn't always work out exactly 3 years after the exact peak in sunspot, but sometimes it gets pretty darn close. So I can't tell you the exact minute of when that when that yield curve expansion is going to end, but sometime in 2027 is when it is due, assuming we don't have another pandemic or a global financial crisis or exogenous events like World War III going on.
Yeah, let's talk about another impact which is often related to the yield curve. I mean, we have now uninverted, yeah, we have come above the zero level, and often this is associated with possible upcoming recessions. So, you know, this is also often used as a kind of pre-recession indicator when the yield curve uninverts. And following your forecast, it should further, or it has uninverted, and it should now further continue to rise. Do you see any relation to recession indication based on that yield data?
Yes, of course. One of the best data series for correlation to that 10 versus 1 yield spread is the unemployment rate, which makes sense. If the unemployment rate rises because it's a poor economy and people are out of work, what typically happens is that the Federal Reserve cuts rates. And so if you do the same analysis of using sunspots versus the unemployment rate, you get a very strong correlation there. Again, using the 3-year lag time. I think I sent you a chart showing that. Do you have that available?
Yeah, sure. Let's switch to that. You mean this chart or the previous
Exactly.
one? Yeah, this one.
So
right?
this is using the same 3-year forward offset of the sunspot data. And you can see that when you get a sunspot minimum, you get an unemployment rate minimum. And when you get a sunspot maximum, you get an unemployment rate maximum, but not at the same time because there's the 3-year lag time. And you have exogenous events like what we've been discussing that will come along periodically and will disrupt that nice correlation. Before the great financial crisis of 2008, we had the problem that Greenspan was still the Fed chairman and he was worried about his legacy. And so he was keeping interest rates too low for too long, which fed a housing bubble in the United States. The housing bubble peaked in 2005 and then it started to collapse, and that led to a collapse of other financial products and markets in 2007 and 2008, which the Fed was a little bit too slow to respond to. That Fed's thumb on the scale really threw off this nice relationship for a while. But once we got to the early 2020s, it got back in sync again, except for the COVID spike, which if you just put your thumb over the COVID spike, then you can see the nice correlation behavior. Having me on, Lars?
Sure, it's a pleasure.
All right, let me answer this. So the problem with this type of analysis is that we don't have enough numbers. You know, we only have how long of a history of stock market? What was the oldest stock market in existence? Like the Dutch Empire or something like that, right? So that's only like what, 1500s? And then how long have we actually have records going all the back into the past? We don't have any records. If we have records going all the way to the past with Babylonians, Sumerians, and even people before that, maybe we could figure this out, but we don't have enough data to make statistics out of this. This is all just be like, well, I see some pattern here. I'm just going to go with it. That's the problem with doing this type of work. We only have a little bit of cycles here, man. We only have a little bit of cycles here. That's all we got. We don't have enough data. That's why everything you see about like, oh, what about the Hindenburg omen? Hindenburg omen only has existed like what, since 1940? Like it's like actual regular Hindenburg omen. We don't got anything for that. I see a Hindenburg omen. Does it mean the stock market's gonna crash? I don't know. I don't got enough data. So that's it. Gematria and see patterns too. But this is better, right? This is better than astrology and all the other ones because you actually have some regularity in economics. You know, people know that economic cycles are around 5 to 7 years, maybe 10, right? You know that. You also see that the moon and we already covered the moon, right? We covered the moon and the sun being aligned has some kind of correlation with something else. So that's it. Gematria is just basically purely on like, if I see a G in my letter that represents 5 and 6 or something. Like, what language are we using? Are you using Hebrew or are we using English or Latin? Which Latin are we using even? So yeah, that's just randomness. So that's garbage in, garbage out. So at least this is not garbage in, garbage out. You know the sunspots. You know crop. Like we have wheat and corn data. You could relate it to the sun, how that relates to climate. And that's actually why climate change happens. Climate change actually happens because of the sun, right? So people want to say climate change might happen because of our farts or CO2. That might have some relationship, but how much of that really contributes compared to the sun? The sun is the biggest thing in the solar system, right? That's it. That's why the Egyptians worship the sun, man. That's what it is. The sun actually does something. Gematria is just basically reading old books and going like, well, or like I look at your name. Okay, Eric W, right? I count up. That's like numerology, actually. You can do numerology too. So that has nothing to do with any reality.
And you have exogenous events like what we've been discussing that will come along periodically and will disrupt that nice correlation. Before the great financial crisis of 2008, we had the problem that Greenspan was still the Fed chairman, and he was worried about his legacy, and so he was keeping interest rates too low for too long, which fed a housing bubble in the United States. The housing bubble peaked in 2005, and then it started to collapse, and that led to a collapse of other financial products and markets in 2007 and 2008, which the Fed was a little bit too slow to respond to. That Fed's thumb on the scale really threw off this nice relationship for a while. But once we got to the early 2020s, it got back in sync again, except for the COVID spike, which if you just put your thumb over the COVID spike, then you can see the nice correlation behaving itself just like it should. So right about August of 2027 would be the 3-year echo point for the peak in the sunspot cycle. And so that's approximately when we can expect a peak for the unemployment rate and a peak for the yield curve spread that we started talking about. That's not going to be good for anybody who's trying to run for re-election in Washington, D.C. But if the unemployment rate peaks in August of 2027, 3 years after the sunspot peak, and starts declining in 2028, then that's showing economic recovery, and that's good for whoever's in power wanting to run for re-election in Washington, D.C. So there is time for those who are in the political game to get their affairs in order and be ready to run for re-election in 2028. But in 2026, here we are. We're still echoing the rising portion of the sunspot.
Here we go. Here's the guy who's thinking, if you draw a sine wave, it matches too. Yeah, so this is where you have to consider phase and other cycles too. There's multiple cycles. So there's multiple effects happening. So that means you have multiple frequencies, but also they won't be static as well. So if you do a static cycle of this, it won't work. It might be actually a variable cycle that changes phase and frequency. And he already told you that the sun has like potentially longer down cycles than up cycles, because sometimes a bottom can last longer than the tops. The tops might form little peaks, but the bottom actually has a bigger trough. So there you go. So this is why you should follow the foundation of the cellular cycles, because those guys are the only ones that actually look into this shit. So Lars, the guy on the left, the German guy, he's actually into all that stuff. He does the dynamic signal processing, and he's into actually looking over everything. So this is the next generation of cycle analysis. The previous generation, they just thought like, well, you got a cycle, you kind of have to fit it to the sine wave. But we have a next generation of person, and he's actually an engineer like me, so he's the best qualified to do this type of work. I actually did spend some time doing digital signal processing in my job. I did it for a little while. That's why the distinction would always get on my case about like, well, you know, blah, blah, blah. Who the hell? Why you know about like the like finite impulse response, FIR filter, blah, blah, blah. And it's just like, bro, okay, I know you're an audio guy. You probably know more than me. So can you guys stop arguing in chat? It's like, Jesus, like we don't need to like show our dicks out here, you know. It's like, dude, that's why a lot of stuff has relationships to it. You know, if you know one field, you probably can know other fields too. People that know music production can know a lot of stuff that actually can help analyze this shit.
Cycle all the way until August of 2027. So we can expect a weaker economy this year and into early 2027.
So, okay, thank you. So this gives a kind of idea. Maybe the recession might still be around the corner, at least then the inverted yield curve might have been again been on spot. But okay, unemployment rate related to that sunspot cycle is also expected to rise for this year. Thank you, Tom. So, I mean, isn't that fascinating that this go into the future? I mean, isn't that the fascinating part of cycle analysis and finding those relationships as you're showing? I mean, at least for me, that's as a cycle analyst, always digging into data and finding correlations.
Oh man, don't get into this. You're gonna start blowing up people. Oh my god, the vinyl stuff. Also it's the amplifier too, right? The amplifiers. Like I knew a guy in Taiwan. I met him in school, and when I went to Taiwan, I visited him. He had like the craziest vacuum tube setup. Like if you know analog circuits, you're just like people who replace their transistors with vacuum tubes. They swear they can hear the difference in response, right? Because the curve of like the amplifier, like the curve response of the amplifier somehow, does the human ear, can they hear that shit though? That's my question. It's like, I know there's a difference. Yes, for sure. Oh, a gallium arsenide transistor makes this curve and a vacuum tube makes this curve. But can the human ear, can it actually hear it? Is it worth paying all this money to get like these vacuum tubes replaced? Because they burn out. They're light bulbs. Vacuum tubes are basically light bulbs that you have to keep on replacing. Is it actually worth it? That's my question. Or is it because your psychology is you imagine that it sounds better? I don't know. Yeah. There's a lot of woo in it. Yeah, that's the problem. I think like fuck, man, whatever. I'm not even gonna get into that shit. But yeah, there's a whole subgenre of people out there. I think there's a Boyd that's just all about vinyl, right? That Grace went into for a little bit. And they just argue about other shit though. It's not because of the vinyl stuff. I don't know.
I mean, you're shy with going into the public with those topics, as you mentioned in your X post. But isn't this a fascinating story about cycle analysis and markets?
It really is. I like anything that will give me the answers ahead of time, even if I know they are not going to be perfect answers. And they can go through long periods when they don't work right, as we saw with the great financial crisis. But it worked itself back into the normal relationship once that was behind us for long enough. It seems to be back to working very well now. This is the point in the discussion where I would ask everyone, don't shoot the messenger. I'm just telling you what the data say. I'm not advocating for a slowing economy. I'm not advocating for anything that means politically. I'm just saying, well, this is what the data say. We as investors should receive that message and decide how that matters to us as in our investing lives. We're not rooting for one thing or another, but it's going to happen anyway, whether we root for it or receive the message and accept what it says.
That's nice. Talking about data and data analysis, let's jump for a second on analyzing the data. I mean, once at the foundation, putting in the same data and just checking, okay, what is digital signal processing telling us on that data? So let me go with that. So the inverted the spread into our application we use at the foundation for the study of cycle analysis, and the spectrum month which is here shown on that chart as an overlay. And if you do the math, I mean, 105 months just adds up to around 8 to 9 years. So it's on the lower end of the solar cycle, but the average should be expected to be around 11. And once I shared this back to you. You immediately said, yeah, Lars, but I told you there have been some events which maybe skew that data. So please also explain to the audience why you think that is a little bit skewed, that kind of digital analysis here.
This is a great question, and I'm glad that we're getting to do this comparison. When you put those data into the cycle analyzer assumes that there is a cycle, and it looks for whichever period, a linear regression of data. So say, for example, you had 100 people and you measured their height and their weight, and you plotted that on an XY chart. Well, pretty much everybody's going to know that height and weight are going to be correlated. And so you can do a linear regression, which means drawing a line through all of those data points on the XY plot, and that line gives the best fit to the data. That's for assuming that there's a linear relationship. A cycle analyzer does the same thing, but it assumes it's not a linear relationship, that it's a cycle relationship, and so it produces the best fit to the data that you give it. It makes no judgments about whether that should be the right period. It just says, well, this is what the best one that I can calculate. But what we see when we incorporate the sunspot data is that the sunspot data do matter, but they don't matter absolutely authoritatively all the time. They for sure matter most of the time, but there are other things that come along that matter also that throw off the nice correlation.
Thank you.
All right, so let me get, I think this is important because what he said right there. So you shouldn't take this stuff as gospel, okay? So this is what Lars is going to show later, and I have the link in the description, and he's going to manually take out like certain events, right? Like the great financial crisis, which like the Fed kind of manipulated, and then COVID-19, he took out that data. So you see this, and then now he does the analysis. But what's more important is that when you look at this, it doesn't mean like the stock is going to go up because the pink line goes up, stock has to go up, or Bitcoin or whatever has to go up. No, it just means that like if it's going to go up anyway, if the trend is changing anyway, this is the best time for it to go up a lot higher than people expect. Okay? Let's say if Bitcoin still wants to go down. If Bitcoin wants to go down, what this might influence is that it will keep it going sideways. Okay? It doesn't mean it's going to go up just because this pink line says it's going to go up. So you got to treat the cycles like seasons. I know it's going to be summer. I know it's going to be winter. I know the average temperature is going to be this or that. Does it mean there could be like a weird day where like it's really sunny out and there's no cloud or winds or whatever? Could be. So it doesn't predict anything about like what exactly it's going to do. It's just telling me like if Bitcoin is going to go up anyway, it might as well do it now because this is the best time it's going to go up a lot higher. So when you're a trader, all you're doing is saying like, if I'm going to bet bullish on Bitcoin, this will be my best bet. It doesn't mean it's going to go up though. It might just keep going sideways all the way through this shit and then go down in August. That's what this might mean. So it could ignore this whole thing and go sideways. There's many times that like this thing does that, right? Like here, like this says like Bitcoin is going to keep going up and go up again. Yeah, it did, but it mostly went sideways during this time. See? So this is why it's like, I'll take this into my, into my calculations. Like if I'm gonna, because a trading is just a risk, and all I'm trying to do is improve my bets. The way I improve my bets is knowing that like if I'm gonna go long, I was gonna go long around here, right? Because everybody was gonna go short. So I was done shorting. Man. I was done doing this shit. The shorting was like really happening from October into December. That was really the big hit. Now it's like, well, it's going to recover a bit, so let's go long here. And then the next time it's going to go down will probably be even steeper. because the trend of Bitcoin, there's a bigger trend. Okay? There's a bigger trend of Bitcoin. That bigger trend is not these cycles. It's a bigger cycle that says like Bitcoin goes up and down around 4 years. We already hit the peak in the summer. Like if Bitcoin wanted to go to 200,000, it should have done it by August. It looked like it was trying to do it in October, but it gave up quick, right? And that's when it went down. So the next time Bitcoin is going to go up is years after this. It's not now. So the thing about it, though, is it doesn't go down in a straight line. It will have its time to recover, and then it'll have its time to go back down. So if you're thinking about shorting it down to 20,000, this ain't the right time to short. So this pink line at least tells me, nah, this ain't the time to short. I'll rather wait until June, and I'll come back and think about it. Then I'll short it again, maybe in July or August. You see what I mean? So you look at it like a helping hand, you know? Back in the sailing days, people sailed on boats on the wind, right? You know where the wind is going. People couldn't sail back to England until it's this season. And then they couldn't sail from England to Virginia unless it's this season. You know when the wind is flowing. So don't fight the wind. So if I'm going to short when the wind is on my back. If I'm going to long when the wind is on my back. You get it? This thing doesn't mean like it's going to go up and down exactly like this thing is suggesting. It doesn't mean that. But it helps. It helps, though, to pick the right times. You should go long and short. Okay? It helps you also, like, say, oh, this is going to be a great time to maximize my gains because I'm going to put more money in this short. I'm going to put less money in another short, right? So that's kind of how you want to look at it. Okay, so it's not like a conclusion, like, oh yeah, I have a crystal ball now. I got a crystal ball here. No. Sorry, it's not perfect. For everything, there's a season. Yeah, that's why it's about astrology. I know the sunspot stuff. I know this stuff. I know that. It helps me make a better bet. That's it. It helps me make a better bet. That's it. All I want to do is make a better bet than the retard next door. That's it. I can't beat Goldman Sachs or JP Morgan because they have insider trading and they manipulate. I can't beat them. But as long as I know this, I can at least make a better decision than the guy who doesn't know about options expiration, cycles, and this. That's all I got to do. That's how I make my money. Because I just need to be a little bit smarter than the average bear. I don't want to be the average bear. I want to be smarter than the average bear. That's all this is.
Let's pause on that topic for a moment. By the way, I use the 10-year minus 2-year. You showed the 10-year minus 1 year, but in the end, the spread looks the same. So this is not causing a big impact here on the cycle analysis per se. So that jumped into my mind. Once you shared that observation back with me, I mean, you're absolutely right. I mean, that static cycle analysis does not give us any indication on the variability on the solar cycle, which is not that static. I then went forward and said, okay, Tom tells me there is this induced impacts, and then I started to create a virtual corrected spread data set. So the three, let me show it back here. So the three areas in time where you said, okay, the oil embargo, the Fed-induced 2008 crisis, and the COVID response, you see I corrected that data here on the chart. Yeah, just by hardly adjusting the data. So therefore it's event adjusted. It's now a virtual data set. What's interesting now, I put this data again into the cycle scanner. One was showing up with 124 months, which is now 10.3 years. So almost exactly the average solar cycle length. So by just correcting the yield or the spread around the yield by the events you mentioned, then gave us back the expected average cycle of around 11 years, which, I mean, this did not jump into my eyes just right away. So your comments have been spot on, identifying those skewed data set, and then we are back now to the solar cycle. So that's just quite interesting, doing some digital signal processing on the data. But in the end, we found the same 11-year cycle when correcting the data by those manual changes.
Yes, earlier I told the viewer to put your thumb over the COVID spike. What you did was you did that with computationally by excluding those exogenous events, and that cleans up the messiness and shows how the sunspot cycle really is the driver. But occasionally there are other things that arise to drive things that in a way that is not what the sunspot cycle says. Yeah.
So, and just finally to round that discussion here up, for everyone who wants to review this on your own, I've put a link where we put this virtual chart for your review. So I've put the sunspot numbers, Tom, as you suggested. So, I mean, this is your idea. I just put a different visualization here on the screen, which on top then showing the corrected spread information, where I just kept the original data, so you see what has been corrected here in that term. So the thumb, you called it putting the thumb on that COVID spike, which exactly happened here, but you can still see the spike. And then I've put the cycle which has been detected by digital signal processing on top, the 10.3-year cycle. So we can see the correlation of that static cycle in terms of the real dynamic solar cycle at the bottom. And just for fun, I also added the gray shaded areas, which are then the US recession times, which is the standard plot, how you put the recessions on the chart. So which is, I mean, if we follow your analysis or even the projection, then maybe this might be around the corner anyhow. And we see, what's interesting here, we see the deviation now, what you mentioned. So the solar cycle bottom around 2008, 9 and 10 was longer than the average. So that's where we then deviate from the static cycle on top, from the real dynamic behavior of the solar cycle at the bottom. So that static sync gets out of sync with the behavior of the solar cycle, which we see at the bottom. So it just shows we cannot use static cycle analysis on its own. We always need to find a way to get back to that dynamic behavior of the real world at the outside. So I just wanted to share back that overlay of your initial idea, just to put all things together. So it's just a comparison what you did based on your experience, by following solar cycle rhythm, market data, and just bringing this together and just getting from a pure mathematical point of view. This is how we would approach it from a digital signal processing perspective. So this is why I was so fascinated seeing your topic here.
Well, and I started out by trying to ask the data, is there any relationship at all between unemployment rate and yield curve and the sunspot numbers? And you can't find out the answer to that unless you put them on a chart and look at them. And when I did, it was a little bit unsatisfying because it wasn't a nice fit until the light bulb went on for me and I made the 3-year shift, and I didn't arrive at 3 years right away. I had to play around with different lag times, but 3 years was approximately what worked the best most of the time. You could do 2.8 years or 3.2 years. It would still fit pretty well. The point is that there is a lag. It's not perfect. But it does show that there's a relationship there, and that is enough of a relationship that we can use that to form expectations about what's going to happen in the financial markets and in the economy in the future. Knowing that it's not going to be a perfect thing and that events will come along sometimes that will disrupt that.
So I think we outlined the possible way ahead for the financial area, but you also shared some findings, not just for financial markets. I mean, this is a natural rhythm which impacts us somehow on Earth, and that financial markets are not everything on this planet. So there's much more. So what you also shared is you did an analysis in regards to the hurricane observations, and you have come also to the following slide here, which also shows a correlation between observed hurricanes and the...
All right, guys, if you live in Florida, Louisiana, or whatever, pay attention. Here come the hurricane forecast for you.
Sunspot numbers, which is also quite interesting.
Yeah, and this is data. The blue data is from a guy I follow on Twitter or on
Yo, what's up? Yeah, someone tried to cut off my Wi-Fi or some shit. You know me, man. I'm just using public Wi-Fi. Sorry, somebody's like trying to fuck around. Maybe somebody didn't pay any of their property taxes. That's why the fucking Wi-Fi doesn't work. Shit. Anyhow, hold up. So, before I get back to the video, let's play this. Maybe this will cut off my Wi-Fi again. Watch this.
Thank you so much. Merci beaucoup. As you can tell, I do as I'm told, and I thought I had to stand up at the time when my immediate predecessor would sit down, and clearly I failed. Good afternoon, and thank you very much for having me with you. I would like to thank the National Press Club, and especially President Angela Grilling-Keane, for not only inviting me to this prestigious venue, but essentially presenting the outline of what I want to talk to you about now. So it's as if we had prepared that together, which we have not. Now let me first of all, of course, begin by wishing you all a Happy New Year. I guess it's still time to do that, given that we are just exactly halfway through between our Western New Year and the Lunar New Year, which will loom in a few weeks' time. I think it's also appropriate to wish ourselves a Happy New Year, given what I would like to talk to you about, which has to do with the global economy and what we should expect for
Oh, they did it again. See, I'm revealing too much. I know I'm talking too much if this thing keeps happening. Oh shit. See? Okay, so this is Christine Lagarde. Like, if you don't know Christine Lagarde, she became the director of the IMF, all right, the International Monetary Fund. And it was funny because like the previous guy got kicked out because, you know, he got caught with a hooker in New York City. If you remember him, his name was what was his name? Oh my God, it was an interesting name. This guy. Let me see. Christine Lagarde placed. What was his name? It was something Strauss. Something Strauss. Another French guy. And what was his damn name? Strauss. Let me see. Strauss. Yeah, Dominique Strauss-Kahn. Interesting name, right? And she replaced him after he got caught doing the dirty with some chica in New York City in a hotel. I guess a maid or something. So, you know.
And what we should expect for 2014. Now I'm going to test you numerology skills by asking you to think about the magic 7. Okay? Most of you will know that 7 is quite a number in all sorts of themes, religions, and I'm sure that you can compress numbers as well. So, if we think about 2014, all right, I'm just giving you 2014, you drop the 0, 14, 2 times 7. Okay, that's just by way of example, and we're going to carry on. So 2014 will be a milestone and hopefully a magic year in many respects. It will mark the 100th anniversary of the First World War back in 1914. It will mark the 70th anniversary, drop the 0, 7, of the Bretton Woods Conference that actually gave birth to the IMF. And it will be the 25th anniversary of the fall of the Berlin Wall. 25th. Okay. It will also mark the 7th anniversary of the financial market jitters that quickly turned into the greatest global economic calamity since the Great Depression. The crisis still lingers. Yet, optimism is in the air. We've left the deep freeze behind us, and the horizon looks just a bit brighter. So my hope and my wish for 2014 is that after those 7 miserable years, weak and fragile, we have 7 with it, or whether it will be the G20, I certainly hope that the IMF will have something to do with it.
So listen there. You got your numerology right there, baby. Okay, so if you think the elites don't care about numbers, they do. I don't know if the Gematrian numbers are correct, but I know like somebody believes in some numbers. Of course, like after the 2014, we had like 2015, 2016, which were like the crappiest stock market years. We had the Eurozone crisis. You had some other crap with Brexit. Asia had some issues. I don't know. It was all kinds of crap. But, you know, overall, since 2013 towards COVID, certain tech companies did well, at least from 2013 to 2018. And then after that, it would just became like COVID-19, blah, 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 try to pump up that market a little bit more. So thanks to COVID-19, you had a little bit more juice. And now we're in 2026. Is the juice over with? Are we done now? Have we lost all liquidity in the markets? That's the question. So everybody's got to answer that. All right, let's continue on with the video. Let me see if I can find that stop. All right, hurricanes, right?
Welcome.
Height and their
So the solar.
Okay, so
global
all right, right here.
relationship that we can use that to form expectations about what's going to happen in the financial markets and in the economy in the future.
Yeah.
Knowing that it's not going to be a perfect thing and that events will come along sometimes that will disrupt that.
Yeah, so I think we outlined the possible way ahead for the financial area, but you also shared some findings, not just for financial markets. I mean, this is a natural rhythm which impacts us somehow on Earth, and that financial markets are not everything on this planet, so there's much more. So what you also shared is you did an analysis in regards to the hurricane observations, and you have come also to the following slide here, which also shows a correlation between observed hurricanes and the sunspot numbers, which is also quite interesting.
Yeah, and this is data. The blue data is from a guy I follow on Twitter or on X. He's a meteorologist who's really good. His name is Ryan Maui, up in the top left corner of the chart. He's the guy that came up with that. It's a 3-year running sum of global hurricane frequency. So not just in the Caribbean, not just what hits Florida, but global tropical cyclones. And he's putting it all together. And I said, well, I recognize that period because you could see it pretty easily. It was about 11 years. And so I took his chart and I overlaid a chart using a little bit of graphical magic of the sunspot cycle and had to do a little bit of tweaking to get them aligned. And you can see that when you have sunspots at a maximum, you get hurricanes at a minimum. And then when the sunspots are declining, you get hurricanes starting to perk up again. So we know that we are now in a period of declining sunspot numbers. And it's also important to know that Ryan Maui's chart was only updated through 2023. So the blue dots are not current and up to date through now. But this was still good enough to say there's a relationship there. I don't know what it does, what the sunspots do to the atmosphere that makes hurricanes more numerous or less numerous. I don't understand that part. I don't need to understand that part. I can see it in the data that there's something happening. And so as we are heading to the next sunspot minimum due to around 2030, we should expect more hurricanes coming in the latter part of this decade. the global warming alarmists are going to claim that CO2 is causing a rising hurricane count and we're all going to die, because that's what they always do. But what everyone should understand, that this is normal, that hurricanes vary over time, and your mileage may vary in your car. Your hurricane count will vary. Last year was a very quiet year. No hurricanes hit the United States last year, which is very unusual. So nobody in Florida got to have any hurricane parties. Well, that's a function of how we are just coming off of the sunspot peak. And now we're going to be entering into a period of greater sunspot activity lasting until the next sunspot minimum, ideally due sometime around 2030.
Yeah.
And then hurricanes will start going down again.
Yeah. So, okay. But not a good outlook, at least for the next 1 to 2 years.
Well, unless you are selling hurricane insurance, then it's great.
Okay.
All right, so there's your hurricane forecast. So just look at the sunspots. That's easy, right? So there you go. Don't bother with the news. The news is just noise. They'll take advantage of whatever they know already ahead of time and twist it to the narrative that should be set. So if you think there's a war that's going to happen, well, sunspots told me so. Hurricanes, sunspots told me already. This and that, yeah, sunspots. Or maybe the moon plus the sun, gravitational pull, and blah, blah, blah. We already went over that on this show. That's why I said, like, bro, there are cycles that influence the earth, influence humans, influence everything. Not everything has to be because of such and such or a reason or that reason. It might have an effect, but it might not have the effect that is actually important. It might not have the effect that you think is important. It's just because somebody wants to sell you something, right? Whether it's lithium-ion batteries, whether it's electric cars, whether it's something else. So, I mean, honestly, the reason you should stop using too much diesel or gasoline-powered vehicles is because smog. Smog sucks. I think that thing you can all agree with. And Iran actually uses a crappier form of fuel, really very crude type of fuel from crude oil, which they burn instead of coal. They don't have coal, but they have a lot of crude oil. So they turn it into this black sludge that they burn for fuel and electricity. It's pretty pathetic, honestly. If you want to look back at World War II history, Germany didn't have a lot of crude oil, right? They only had like Romania as a source of crude oil. That's why they always wanted to take Ukraine and all the other places, the Caucasus. What they had to do was take coal and turn it into some type of crude oil equivalent. And that's why during Operation Paperclip, we took a lot of scientists from Germany to teach us how to turn coal into some form of petroleum equivalent. So that's why Germans are really good at chemistry. They've always been good at chemistry. It's not because of the Zyklon B or whatever. So they got you the ibuprofen. They also got you the Zyklon B. They also turned coal into some type of petroleum equivalent product. So yeah, they're very good at that. So anyhow, let's discuss something else. What do I want to talk about? Let me see. Should I talk about Bitcoin again or what? I don't know. I don't have much time. We already have 2 hours. Let me try to see what else I gotta talk about. Oh, actually, one of you guys talk about nothing wrong with Ladies of the Night. I actually was in Colombia after the Secret Service agent got caught getting a prostitute. So I actually took a picture of myself in a robe, like some fancy robe, in front of this Hotel Caribe on the Cartagena. I took a picture. I don't know if I still have that picture. Maybe my friend has it. I don't know. It's a good thing I don't have incriminating evidence against me, because I didn't put this shit on social media. I don't know. Whatever. Maybe it's better that I don't have that picture anymore. Anyhow, to U.S. This was 2013, so just before what's her face? Christine Lagarde talked about that whole numerology stuff here. 2 U.S. Drug Enforcement Administration agents facilitate a sexual encounter between a prostitute and a U.S. Secret Service. What the fuck? You had to get like 2 DEA agents to get you a hooker? Like, come on, bro. Like, it's easy to get a hooker in Colombia if you wanted. Man, you didn't need to get a hooker in Colombia. Jesus Christ, this is stupid. Anyway, between a prostitute and a U.S. Secret Service agent days before President Barack Obama visited Colombia for a summit meeting in April 2012. According to Justice Department investigation obtained exclusively by NBC. A summary of the findings of the investigation included in a December 20th letter from the Justice Department's Office of the Inspector General to Senator Joseph Lieberman and Susan Collins. I don't know if you guys even remember those people. Yeah, they partied hard, huh? Yeah, I took a picture in front of there just for the fuck of it, because I was there with my friend, his soon-to-be wife, so basically his fiance, and his fiance's friend, which I was like trying to, get with. So she was so hot. I don't know. She was so hot. Fuck. But she was really annoying to me though, and I was like, man, whatever, fuck off, bitch. but I was just like, man, whatever. I think when I came back to the States, she started trying to like get like contact with me. It was just like, I don't know. Oh, fuck it. I don't know. It was a missed opportunity, I guess. I think that was one of my missed opportunities. But I mean, once you're in Colombia, you can find other girls. It's just not really that whatever. So I mean, now with all the passport bros and all that, it's probably a different game. It's probably like not that easy. Like back then, it was really easy. I mean, seriously easy. So, I mean, you did not have to pay if you didn't really want to. Paying was just like a convenience. Because like you're just lazy, right? It really was just for convenience, but it was so dumb. I think honestly, this whole shit. I mean, I couldn't believe it. Like you had to get 2 DEA agents to like get you a hooker. It's like you're that lazy. Like just go walk outside for a couple blocks. You could find something. Holy shit. But like Cartagena back then was like really dangerous. There was like this section where it's just like a slum, and there's a section where it's just tourists. So maybe the guy didn't want to walk out because he was just like, nah, I'd rather stay in the hotel and let these other. I couldn't believe you get other federal agents to get a hooker for you though. It's like this. Oh my god! Like, oh, they probably knew what was up. Yeah, you pay them to go away. Yeah, exactly. Yeah, exactly. But she was model hot. But and my friend was like. It was just like, she's just like, she's only interested in white dudes and this and that. But she started getting interested in me after I left. It was because my attitude was just like, fuck you, bitch. And that's usually how it starts. It's just like, well, yeah, it's like some like bitchy ass girls. It's just like they get interested in you because you're just like, you just don't care about them. And it's like now they're interested in you. And you're just like, how come this guy doesn't give a shit? And it's just like, oh my God, I got to play this game across like how many miles now? I don't want to do this. I'm like, fuck this. It might be interesting if you were closer, but no, I can't do this long distance shit. Nah, it ain't gonna work. Fuck this. Anyhow, yeah, it's funny. It was funny. Okay, let's read this. Let's read the errors of the Korean War. So, I just want to read. Oh, man, can I read this whole thing? Damn, this is pretty long though. Okay, let me try to read the important paragraphs. Okay, so when we look at the Iranian situation, it's like, do you want it to be Vietnam, Afghanistan, Iraq, or do you want it to be quick? So Korea was relatively quick because it only lasted a few years, like maybe 2 or 3 years overall. Even though like the U.S. didn't win technically, right? We had a stalemate essentially, but at least like we accomplished the goals. We made sure that North Korea didn't take South Korea. We accomplished that. And we also accomplished the fact that a lot of people went along with it. Like the UN supported this war. Like, I think this is the only war the UN said, like, yeah, sure, we approve it. And US, you can go lead it. And you had a whole coalition of people from different countries going in there. I mean, Afghanistan, Iraq was like, what the fuck? Kind of thing. It's like, no, we didn't really approve that. Vietnam definitely was not approved. The only people that came around in Vietnam was like South Korea, Australia, New Zealand. Like even the UK was like, hell nah. We already had our war in Malaysia. We ain't going to another jungle war in Vietnam. And you know, Malaysia is also another interesting piece of history that you want to look back into. That's how the UK had a little taste for jungle warfare, was in Malaysia. The strangest and most unusual war the United States ever fought was the Korean War. It certainly was the most frustrating. It was the war, and it was a war, not a police action or a mere conflict, which many Americans choose to ignore while it was being fought and would prefer to forget now. But as the Chief of Naval Operations has said, the Korean War was the first limited war the KS. The heck is the KS? Whatever, ever fought. He also made the point, since repeated by many American military leaders, that limited wars are more likely to occur than global wars in our thermonuclear age. It is important, therefore, to absorb Korea's errors and to avoid its mistakes. For there were mistakes in that 37-month war, and we would be exceedingly foolish to say there were not. It would be equally foolish to attempt to conceal our errors and choke off constructive discussion of them, believing that in so doing, we give aid and comfort to the enemy. If the communists made any study of Korea, the mistakes we made will be as obvious to them as theirs are to us. Likewise, it is foolish to believe that the Korean War was an anachronism that cannot happen again, and that it has no significance, lessons, or meaning. The first major military error of the Korean War was the Wonsan landing in October 1950. It was unnecessary and it should never have been made. The Incheon assault a month earlier had been vastly successful. As General MacArthur predicted, it was the anvil on which the North Korean People's Army would be pounded to pieces. The successful amphibious assault would sever the communist supply route, and it would send that army scurrying north of the 38th parallel, broken and beaten. So it had, as early as September 29th, when the commanding general first proposed the amphibious assault at Wonsan, evidence was growing that the disorganized Reds could scarcely make a solid stand except in the rugged mountains of North Korea. On the east coast, the northbound Republic of Korea First Corps was meeting only spotty resistance, and since its breakout from the Pusan perimeter, it had advantage more than 10 miles per day. At this rate of advance, the ROKs would soon capture Wonsan. In fact, the advancing First Corps did capture the city on October 10th with only minor resistance, a full 10 days before the Marines finally got on shore. The U.S. Navy opposed the landing for several reasons. Loading Marines and their equipment for a Wonsan assault would tie up the small port of Incheon, whose capacity was already fully needed for unloading. Second, there was not enough logistic shipping in the Far East either to supply an advancing 8th Army on the West Coast and simultaneously carrying and support a large amphibious effort on the East Coast. Finally, there was gathering evidence and many more suspicions that Wonsan Harbor and approaches were mined, and clearing a path to the nearby beaches would be time-consuming and difficult, with the skimpy mine warfare forces available. Vice Admiral C. Turley Joy summarized the Navy's opposition when he said, "None of us at NAVFE could see the necessity for such an operation, since the 10 Corps could have marched overland to Wonsan and with much less effort than it would take to get the Corps around to Wonsan by sea. So I think this sounds kind of familiar. We got 2,500 Marines coming around from Asia to Iran. What the fuck are they gonna do? Are they gonna land and try to take some port out because they got some oil on it? I don't know. Look, I don't know. Like, when you go into war, you really gotta think about it, right? It's really a game. And then they're talking about mine, right? I'm sure the Iranians already mined that whole area around that Karg Island. Like, is it easily gonna get taken? I don't know. That's really how it goes. Dishes are hot until they open their mouths. Many such cases, yeah. Women are really interesting, but they always try to play games and with you, and I think it's fun when you play games right back. It's always fun. I think that's the most entertaining thing when you go out with a woman. It's like the games you guys play with each other. I think that's more like a foreplay to me. Like, just to have that effort of going back and forth, and like it builds up. It's really a lot better than just like, yeah, just pay, get a hooker or whatever. It's like, yeah, that's kind of like, or you got a one night stand or some bullshit. That's just, yeah, that's pretty boring. I think when they make it hard to get, it's a lot more fun. Watch the vid I referenced. There's no way they're going in by sea. Oh, okay. We're gonna see what happens. Helicopter drops, parachuting into it. Ooh. If this is how it's gonna be, well, then that's gonna be a more tricky operation. I know Trump probably like a lot more confident after like Madero and all that. So let's read some more of this. This will be the second era. The second era of the Korean War followed and was a result of the intervention of the Red Chinese Army. When the Chinese Communists attacked the U.S. 8th Army in late November 1950 and the 10th Corps in early December, UN forces commenced falling back. The 1st Marine Division found itself surrounded by 6 divisions near the Chosun Reservoir, and so commenced its historic attack in another direction. In Far East headquarters at this time, a degree of panic and inertia reigned. Many believed, and so stated, that the Red Chinese Army had both the capability and the intention to drive the UN forces into the sea and overrun the entire Korean peninsula. Command uncertainty was underlaid by a genuine apprehension that the entry of the Red Chinese into the war might also be a prelude to further Soviet adventures elsewhere, perhaps even the start of World War III. Accordingly, the UN retreat was made in an over-anxious mood. On Korea's east coast, the North Korean capital city of Pyongyang and the seaports of Chinnampu and Incheon were evacuated and abandoned to the enemy. The South Korean capital, Seoul, was also abandoned. In fact, contact with the enemy in the western zone was completely lost. On the east coast, the U.S. Marines succeeded in fighting their way out of the communist trap, fracturing 5 Red divisions in the process. The leathernecks were lifted from Hongnam, South Korea. Wonsan was now abandoned. A new line far to the south of the 38th parallel was established to launch the Red Chinese. Retreating was not the mistake, for the GN forces were scarcely positioned or prepared for the heavy Red assault. The error lay in the distance or amount of the retreat. A defensible new line could have been held in the vicinity of Korea's narrow waist, no further south certainly than the truce line, which was finally agreed upon 2 1.5 years later. Both Lieutenant General James Van Fleet and Rear Admiral James H. Holt felt such a line could have been held. It follows, of course, that had this been done, a great amount of the cost of fighting, which occurred later, might have been avoided. So all this stuff is hindsight, right? This is like armchair quarterbacking. I don't know. This is why the reality of the ground. I don't know. I don't know how I would even like think about this shit. It's not like chess, right? Chess is like an orderly game. You move your chess pieces a certain way. You always know. That's why like you look at chess, it's like, and you look at real actual war, like it's not theoretical. It's reality. It's like how you actually do it. And a lot of it's psychological too, right? You see the Chinese coming into the Korean War probably had a huge psychological effect on people. People were just like second guessing how they should approach it. You know, so psychology wins too. Psychology. It's gonna be interesting, I think. Anyhow, let's see. What was the third? Is there a third reason? The third mistake of the Korean War was a failure to coordinate the aerial interdiction program on the theater level. The DN effort to isolate the battlefield with air power was a lengthy and expensive effort from early 1951 through 1952. Almost 100% of the offensive effort of the carrier task force, 60% of the offensive effort of Marine Air, 70% of the offensive effort of the U.S. 5th Air Force, and 70% of the blockading effort of the Blockade Force, Task Force 95, was devoted to interdiction. At no time during the course of the war did Far East headquarters assign areas of responsibility, coordinate targets, or establish priorities or interdiction criteria. As time went on, an agreement of sorts grew to be accepted. The Air Force would take the western half, the Navy the eastern half of Korea. Within its own area, the Navy coordinated the interdiction effort of surface forces and naval air. This lack of coordination was undoubtedly a responsible factor in the overall failure of interdiction to isolate the battlefield. In the writer's opinion, the Navy made a mistake in the Korean War by failing to use and operate night carriers. Another of the principal reasons why the long, costly, and intensive effort to sever the enemy supply lines failed was the inability of the UN Air Forces to locate, identify, and destroy at night the thousands of trucks and trains which operated from dusk to dawn, and which brought ample supplies and munitions from Manchuria to the front. A single carrier operating at night could scarcely have staunched the Reds' heavy nighttime supply flow, but it would have done far more damage than the same carrier by day. Moreover, its use would have added knowledge and experience in night flying, night operation art. Well, we'll see. We'll see how it goes. I mean, there's a reason why, the U.S. decided to go in when it did in Iran, because once it's springtime in Iran, there's less cloud in the sky, right? Because if you have a lot of clouds, it's kind of hard to get good targeting information from the satellites and all that. So there's a reason why it happened. And does it coincide with the month of March, with this Mars? So this is war, right? We are in the war month, and we're going to head into Nowruz. Nowruz being the New Year's. So it's essentially where we're at. Okay. I guess we're done here. I read enough of that. Oh. Okay. Close this out. So tomorrow we'll have Hold on. All right, there we go. 9 count. All right, now completed. We have this Ichimoku cloud. The high is 78,975. If we break that, we can go next week. We'll have options expiration for Bitcoin. So maybe it kind of goes up and then long Bitcoin with MSTR, then that's probably the next chance we get at getting it. If it breaks down hard on the NASDAQ, maybe this will follow. I don't know. Because so far, we haven't dropped that badly since NASDAQ fell. You know, every time the NASDAQ has fallen, Bitcoin has ignored it, which is exactly what I wanted to see finally. It's not following it. Same thing with IGV. Okay, so that's kind of like, I want to trade Bitcoin. That's what I want to see. Ideally, I hope that it would test 60,000 again, maybe drop to 50,000 to scare everybody off. It would have been a better trade, right? If you got like Bitcoin really cheap before it went back to 80,000, 90,000. That would have been really good. But we got to trade what we got to have. So that might not be happening. Okay, I don't know. Unless Jerome Powell says something crazy, maybe it'll happen anyway. I don't know. But you gotta pay attention. You gotta pay attention to see what happens after Jerome Powell, and then after Micron too. Micron will have earnings. All right, guys. So that's what we gotta work on. All right, let's see what else. We did that. Let's look at this chart here. This chart is the credit spread. So this is another bond market chart. We see bond markets rising here on the credit spread, meaning that there is a lot of problems with junk bonds versus investment grade bonds. So when this thing starts rising, there's trouble. The last time it started rising, you can see this was just before the tariff stuff, right? We started getting right into the tariff stuff, right into March. March is when shit hit the fan, and we started really crashing. So we're happening right now again. Does that mean it's still going to go up? I don't know, but it's prepared for it. Let's see what else we got. We got bond market is getting twitchy over the past 20 years. When credit spreads blew out the S&P 500, wasn't even beyond a pullback yet. It was 3 for 3 bear markets. So we are at the edge of a bear market. Does that mean it's going to happen? I don't know. It could recover. It could bounce. We could say forget it. But we are going to see a bear market if we break down any further on S&P 500 because the bond market says, yeah, we're going to break. So the credit default swaps I was talking about, like Oracle, right? So the bar market says, like, yeah, you're ready to crash, baby. We're ready to crash. So here we go. And that's why I said look carefully at that 3-month yield versus 2-year treasury market yield. See, that's why I was bringing that up. Because, like, if you look at the other side of the bond market with credit default swaps, yeah, this could be a beginning of a bear market. And if you look here, there was a bear market which wasn't really that bad. It was just going sideways just before I played that video of Christine Lagarde, right? 2014. Guess what? We had a bear market. The S&P 500 basically went sideways, so it wasn't that bad. Not like 2022 or the great financial crisis of 2007, 2008, but it was definitely something that people got painful about. So there was like a Asian crisis. There was the Eurozone with the Greek debt. There was some other Brexit was coming around the corner. So yeah, there was some issues there. Anyway. Okay, recession odds jump. Yeah, no shit. If oil stays at $100, $120, $150, $100 a barrel, yeah, you're definitely going to get a recession. So since we're hovering around 90, of course this is going to go up. So no shit. We don't need this information here, but yeah, recession odds have jumped up. All right. What about this? CTA positioning. So CTA is the commodity traders. They position themselves on the futures market. So the S&P 500 futures, the ES or the NASDAQ futures, the NQ they'll look at. So every time this thing gets a little down, you kind of have to think like, well, is it going to be like March, April of last year? Is it going to be like July of 2023? Okay, or maybe 2024 we had some little hiccup because of the yen. I mean, I don't know. I mean, it is bearish though, right? It is bearish, but it doesn't mean like it can't bounce. Okay, so if we drop from Powell into Friday into next Monday, or maybe nothing happens until like later in the month, okay, or April. Maybe it'll happen in April, early April 1st. Then yeah, all right, fine, I'll agree with you. Otherwise, I don't know. I can't say. Because bear markets, being bear markets, can have very good push ups. Okay, so things go down very fast, but they can also go up very fast. If we already have a bear market condition, then there's nothing to say that you won't see a very huge move going up when it needs to go up. All right, so these are levels we have to watch for the, I guess this is the S&P 500, right? Okay, S&P 500. So the daily move going tomorrow is between 6,645 and 6,774. Samantha says that like if we are going to move up, we are probably going to hit around 6,780. So somewhere around here at 6,780 will probably stop, and it will probably start moving back down. Okay, so if you want to short, wait for the market to push this up to 6,780. Maybe after Powell, it'll go up to 6,780, and then you short it there before Micron. Micron has earnings after the close. Here we have another view. This is the SPY, and you can see a similar thing, 676, 677. So this is the top area. So watch that. If you're going to short, probably wait for it to go up that level. Here's the expected moves if we want to go up and down. So if we go high, it's going to be 684-ish. And then if we go down, it's 63.40, 63.60. So basically SPY of 640. All right, somewhere down there. So it could go up and down, right? That would be great for trading. Okay, so if you look at that. All right, anything else? So we got earnings. I didn't see any activity. So we had Oklo, Lululemon, Docu. I didn't see much activity. Everything's been pretty subdued. Nobody has made a big move. Tomorrow morning will be Macy's. And then the big boy, which is Micron, MU, the last semiconductor to report. It's always at the end of the season. Will be after the close, so after Powell. And then the next morning on Thursday, we'll see Alibaba. So a big Chinese name, Alibaba. And then after the close, FedEx, Planet Labs. In the morning, there's also Intuitive Machines, LUNR. So I guess Thursday we'll have some space satellite earnings. But mostly, yeah, nothing much. There's some other Chinese names here. I'll see Getty. So I don't know if Gavin Newsom's relatives have Getty, and got Playboy, which reported on Monday. So I don't know. I didn't check those out. Did they do anything? Who knows? So that's about it. So let me play some videos. Let's close this out. 2:30. All right, let's play some videos here. Thanks. Let me. Bitcoin. Let's do a Bitcoin.
This volume signature, this bar covers like 95% of the down bar and 90%. We have testing after that, increased selling without the result, good reaction after that. We have like the best up bar, even if we compare it to this one right here. This is almost times 3, but the spread here is probably times 175. Something like that. Demand is increasing. We have this is the largest volume signature, so therefore opposing is coming in. Immediate down bar after that suggests some kind of weakness and retest again into the lower level right here. As we retest, look at the volume signature, so low. And then after that, demand is back. We definitely don't have that very strong volume profile confirming that like there is some strength behind the effort. But we need to remember that this here in itself has so much demand behind it. So it's natural that the price goes down. And then this area right here also has some buying. This has some buying. Supply is coming in, non-reaction. Supply is coming in, non-reaction. And then continuation. So we're improving here as well. But we need to overcome this level. We saw the improvement here as well, right? This is definitely better. Looking into this is more dynamic. The structure of it is the same. Even the texture, like I'm looking at this, the texture feels the same as well. So with that, the key is what's going to happen here at like 77. Last time this happened. This led, this.
All right, Bitcoin bulls. You don't want that to repeat. So that fake out pump in early 2026 led to the final drop you saw late January into February. So you don't want that to repeat, okay? The cycle is in your favor this time around. Not like last time. The cycle is in your favor. You have all the way into June. So if you want to pump Bitcoin, whoever controls Bitcoin, you have your shot right now, better than January, February.
No demand area with the ease, it led to this. And I'm looking at the current like stock market and I'm thinking, are we at the same place? You know, here, could we like break through and accelerate? This would be very common and typical.
All right, so that's what you gotta watch, guys. Pay attention to your levels, see what happens. It might not resolve until April, though, because I told you, Bitcoin, Ethereum, their options expiration is at the end of next Friday, not this one. But for now, let's pay attention to the stock market and see if Bitcoin kind of zigzags based on that. Okay. Now let's look at Samantha's video. Let's play that. I think she's talking about oil. And I've already told you to get oil, so this should be a confirmation of that.
This short clip is from my live trading room. You can engage directly with my fabulous team and me at leduketrading.com for all our research and trades. Or for just my daily live streams, you can access via
Yeah, I mean, if you guys got tons of money, it's better off you just listen to her. Just pay her subscription and whatever. Go to her Discord. She has a Discord. She's got a bunch of Zoomers running it. Yeah, she's really knows how to market her services. Let's put it that way.
YouTube memberships. All links are in the description. This 2026 prediction, but also XLE. Commodities outperform and specifically, I'm going to show you the XLE charts then and now. All right, so here's energy. Boomer stocks of the new inflationary assets was a key thing as it related to XLE. Basically, I see higher metals pricing keeping a bid in large industrial companies, including those that are used to extract, process, distribute oil and gas. Basically, boomer stocks of the new inflationary assets. So this was XLE, and you know what it looks like now. Here, this is this. Can you see XLE? Broke out, beautiful. and then XLE relative to SPX, exactly what you just asked about. You expect XLE to outperform? So did I, Kevin. And here's the chart today, because I just took it last night to show everybody. So here we are. So this is what's happened. And more important to your point, this is what's happened. Look at XLE has outperformed S&P, and it's not done yet. Hasn't even gotten above zero. Well, it's 0.01. Anyway, the point is it's coming up and it's doing fine. Now, I also showed some other charts in this whole section. Literally your comment, Kevin. What have we got? We've got this. Look at all the way up there. Isn't that gorgeous? Look at that. And that likely would have gotten some profit taking, but no, not with $100 crude. So yes, they are pretty done. I got one more. So here's the other one. It's not done. That's XLE to SPX, but it's a little busy. Anyway, when this starts to roll over, and this is key, it comes back inside the 80 mark, and then we have digestion. Right now, it can stay overbought. Markets can stay overbought. Markets can stay oversold. And right now, oil is overbought, big picture. Once we get up here, then cross over, and then come down, we'll have some profit taking, but that hasn't even kicked in yet. I hope.
So, that's the fear, right? Like, if Trump tries to taco his way out of it. So I think one of my streams, I said, so I basically said, like, is the taco trade about to die? Like, I know Trump wants to get out of this shit, but I think he bit too much, more than he could chew, right? This is the problem. We are at that point where he bit too much. Okay, so hopefully here I can read this last article here. Hopefully this whole internet here can withstand this shit. All right, this is the last one. Iran and its regional proxies have stepped up attacks on Mideast Gulf energy infrastructure. All right, so there's attacks of the UAE energy assets increase as war broadens. This UAE is essentially Dubai, so that's Dubai. All right. The latest attacks in the UAE came after Tehran vowed retaliation against the country for hosting U.S. attacks on Iran's targeted drone strikes on Fujairah port have exposed the vulnerability of the UAE's main oil storage and bunkering hub. Okay, an attack on Tuesday's March 17th started a fire and disrupted terminal operations, according to authorities. No injuries were reported, while market sources said at least 2 terminals were affected, forcing some berths to close and vessels to move to anchorage. The latest strike came only a day after a fire in Fujairah industrial zone halted oil loadings and followed a drone attack on March 14th that damaged at least 2 crude storage tanks. All right. So I guess things are still going on, right? Let's see here. Monday's March 16th, operations in Abu Dhabi's Shah gas field were suspended after a drone attack caused a fire at the site. This appeared to be the first direct hit on an upstream asset in the UAE. The field, jointly operated by state-owned ADNOC and U.S. firm Occidental Petroleum, OXY, west of Abu Dhabi near the Saudi border, in an increasingly exposed energy corridor. Saudi Aramco's 1 million barrels per day Saiba oil field was also targeted by drones for 3 consecutive days since March 7th. Shah is one of the world's largest sour gas developments, and ADNOC said in May it was exploring raising its capacity to 1.85 billion feet cubed per day from 1.45 billion feet cubed per day. The site also accounts for around 5% of global sulfur production. All right, well, there you go. All right, so, things are still pushing on. I don't know what to say about this. The bulk of recent attacks is focused on refining and storage infrastructure. A fire broke out at an unidentified facility and ADNOC's 817,000 barrels per day Ruwais refining complex on March 10th, while Saudi Aramco's 550,000 barrels per day Ras Tanura refinery on the country's east coast was targeted twice that week on March 2nd and March 4th. Bahrain's 405,000 barrels per day Sitraf refinery and Kuwait's 346,000 barrels per day Mina Al Hamadi refinery have also come under attack. The conflict has not been one-sided, with Israel also hitting Iranian oil facility, including storage depots in and around Tehran. So here we are right now. I don't know how long this is gonna last. I don't think you want another spike to 120. The longer you spike up to 120, the worser you'll be off. Okay, guys? All right. It's almost 3 hours. I think I covered enough of what you need to know. Remember, tomorrow, 2:30 Eastern, Jerome Powell will start talking. That will be the big event tomorrow. After that, Micron, after the market close at 4 p.m. Eastern, Micron will have earnings. So those two events are pretty much the only events that really matter. After that, it's just option expiration. So if we get a big spike or drop, maybe that won't last till into Thursday, and then it will just recover into Friday. And then we have to wait for Monday to finally be free, because the market makers, the casino, doesn't want options buyers, puts and calls to win. So they'll put it at a price where both of them will lose the most so that they take the profit. And then after that, we can continue on and be on Tuesday. So next week, Tuesday, will actually be the real price. See how the game goes? That's how the game goes. You have to be very patient when you play this game. You can't react to any kind of noise. Noise is just noise. It comes and goes. But the truth is there. The truth is that eventually oil will keep on rising. That's the truth. Gold and silver will probably go sideways. The stock market itself is run by tech companies, and it's essentially just semiconductors. Will semiconductors continue going up? That's a big question mark. If semiconductors go down, does software take over and go up and help it out? That's the big question mark. If it does, then we'll just go sideways again on the market until June. And then once June, July hits, then we'll finally go down into September, October. And then you buy the dip again and you go back up into 2027. And then 2027 is when the real pain happens. So this whole year could be nothing but noise. It won't be like last year. Last year was easy. Buy in April, sell in October, November. If you had semiconductors, sell in January, February. If you had silver, you would have held it, right, until February as well. And then from now on, it's just like, what's the easy trade? The only easy trade I saw was oil. I don't know if that's changing. That's the problem. I want to recommend you something else, but I need to see something different. Otherwise, I'm just going to be like, keep buying oil companies. That's it. All right. You sold it. Good. Wait, because XOP right now is at the resistance level, so I think it's gonna take a break, and then oil will probably be like eventually go back down, and then you just buy, and then you'll have to and then I probably won't recommend UwU anymore. It's like I said, like 2/3 of your capital goes into NRGU and 1/3 goes into Gush from now on, unless I see something different with refineries. That's a problem. Refineries are a little bit difficult. With all the Iranian bombings of the Gulf, it looks like refineries are very vulnerable. So that's kind of a issue. Although some refineries are okay, right? Oxy is well diversified. OXY, Phillips 66, and MPC, Marathon Petroleum. So those three are actually doing okay, but UwU is kind of too spread out. It has Halliburton on there, Schlumberger and Halliburton. Every time Iran beats up like the Gulf Coast, that crap just goes down. So there you go. You see the difference? That's a problem. All right, guys. I'll see you around. See you tomorrow. NRGU, Gush. So one of my streams, I said 2/3 NRGU and 1/3 Gush. Temporary for now. If I have to go back to UwU, I'll go back to UwU. But for now, that's where things are gonna go. Yeah. Oxy has been, somebody here was saying they have leaps on Oxy. Yeah, it's boring. That's the stock you want to get into. The stock that's boring for years, pop. That's the same thing with silver. Silver, the boomer, I showed a video of the boomer selling silver at 35 because he thought it was just going to go back down and go sideways again. Nah, bitch. Once it broke $30 an troy ounce, that's when silver gets interesting because it's going to moon. See? The sideways stocks, the boring stocks are the most interesting because when they pop hard. That's you saw ExxonMobil did the same thing, and you'll see it again with other stocks as well. So always look for the bigger the base, the higher the space. That is the motto. The bigger the base. So you should look at it. You should always pay attention to stock that goes sideways and does nothing for a long time because once those start moving back up, they move back up hard. Yes. So ExxonMobil was one of them. Deere, right? Deere, the tractor and farm equipment. Once it had earnings, it popped. So the problem, Deere pulled back because like oil prices went up. So there's a lot of companies that do not like higher oil prices. Okay, so that's why I can only recommend oil right now. I am looking at those other ones. I have the boomer. So here, let me put the banner back up. Here are the stocks that I'm looking at. Like so boomer portfolio. Let's look at this. So we got Alcoa. Alcoa is improving. Aluminum, copper, FCX, GEV, nuclear, and other electrical support. CAT. Okay, that's kind of like Caterpillar, kind of like a Deere, but some of these are already going down because of the oil prices going up. Yeah, so I mentioned like last week, CF for fertilizer, and then the next day it went up 8%, and the day after that went another 8%. Like, oh shit. Damn. Oh, damn. I should have talked about fertilizer another day before that. Oh, well, too late. But yeah, fertilizer is also something I love to look at, and it hasn't gone anywhere for years. The last time it did anything was during the Ukraine shit. So after that stuff, it went nowhere for years, right? 2022. And now fertilizer is back in action, baby. So, yeah. Enphase, yeah, Enphase is good. Yeah, I've noticed that the way it reacted on earnings, yeah, that's definitely good. So we have a lot of stocks to look at. I kind of wanted the stock market to puke so that I could say like, oh, okay, time to buy. Let's go. But I don't know if it's really gonna puke that much. I don't know. Fuck. Do I have to wait until August and September now? See, this is why it's hard to do this game, because you have to be very patient. You don't jump the gun and buy the price. It has to be a good price. That's how you make the most money. You have to get at the right price. That's the hard thing you have to understand when you're playing this game. You just can't get a mediocre price, because you open yourself up to danger. Because if something goes down, you get scared and you sell it off too early. If you get at the right price, you won't have that psychology. I don't know everyone's psychology right now. I've been through a lot playing this game, but some of you guys, when I recommend a stock, if you get it at the wrong price, you're gonna have the wrong mentality, because if you get it at the wrong price, you're gonna be like prone to selling too early, or you might not even make any money because you bought it at the wrong price altogether. Yeah, so buying at the right price is even more important than knowing the right story. If you get the story right, but you bought the stock at the wrong price, it's worthless. It's absolutely worthless. Yeah. All right, you got a price? Okay, you got a price. So let me see. Let's wait and see. You gotta be patient. It's more like that's why I say it's more like baseball. You don't swing at every pitch that's thrown at you. You could also analogize it to football. Like, early in your life, you take riskier plays, right? If you're young, you'll take a riskier play. That's why some of you guys will make so much more money than me. I'm at the older part of my life. It's the fourth quarter for me. I'm not going to take as much risk. Some of you guys that do risky plays, it'll work very well, and you'll make a lot of money early on, and it'll set you very nicely for the future. But for me, it's like, it's over. I'm not gonna do options. I'm not gonna do crazy shit. I'm not gonna do anything that I didn't learn to do. So that's why it's a different game. That's why it's a different game for different people. So that's the most important thing you should learn from this. It's really a different game for different types of people. But hopefully the knowledge I give you is applicable to everyone. Everyone should know this stuff I'm talking about, regardless of how you implement it. I give you the strategy, you figure out the tactics. Are you gonna invade it through the helicopters? Are you gonna do amphibious assault? I don't know. You figure that out. All right, guys. Already 3 hours. Come on, I gotta go. Good luck tomorrow. Remember, Jerome Powell opens his fat mouth 2:30. That's when the fat lady sings. 2:30 Eastern.